My name is Snehal Antani. I'm the co-founder CEO at Horizon3. My background, I was a CIO at GE Capital and then moved out west to be the CTO at Splunk. Post-IPO, helped scale that company and then left at the end of 2017 to serve within US Special Operations for about 4 years. So I served as the first Chief Technology Officer for a unit called JSOC. You can go Google what they do and you can understand. I was a tourist. My military experience was watching Jack Ryan and Tropic Thunder. I was happy to be part of the team. But that's where I met my early team and co-founder, and when they retired from the Air Force, the Army, and the other branches, we all started Horizon3 together. About a third of my people are former NSA, CIA Special Operations. 2/3 are nerds and skinny jeans that know how to build, ship, and sell enterprise software. And the problem to go solve is we had no idea we were secure until the bad guys showed up. Are we fixing the right vulnerabilities? Are cybersecurity tools actually working? The answer is, I don't know. And so we pioneered this concept of AI hackers. And we really saw this early within the Department of Defense and then brought that to market as the first commercial offering. So what I'm going to talk about today is actually what's happening in the cyber landscape with everything going on from AI hackers to mythos to other things. And hopefully it gives you a sense of how to cut through the noise and really think about the underlying pains that CIOs and CISOs are suffering from, and then use that to think about investment opportunities, founder opportunities, and so on. Is that cool? Or we can talk about world politics. I'm sure that'll go over really well here. There we go. So I'm going to start with a story. And the story is that back in 2022, the Japanese armed the Ukrainians. And the Russians got angry. And and they ransomwared this small company in Tokyo. And that company in Tokyo provided cup holders to Toyota. And due to just-in-time logistics and lean manufacturing, Toyota had to shut down 28 production lines, and it cost them almost $400 million of economic harm over cup holders. The flex by the Russians was that they knew where to apply the least amount of effort to cause the most amount of economic harm, all below the threshold for war. And so when you think about what's happening, this whole era of cyber-enabled economic warfare really started around then at scale. And so now, there's a very beautiful cup holder slide there. And so when you think about what the world looks like, suddenly I don't have to attack you directly. So as the Ukraine war broke out, about 1,000 companies withdrew from the Russian economy. And many of those companies received significant cyber attacks and other adverse effects. And they didn't have to get after those companies directly. They were able to go after their distributors and their suppliers. So if you're in agriculture, I don't have to hack you directly if I can get your fruits and vegetables to be stuck at the border and get them to spoil in transit. I don't have to hack Toyota directly. I can go after their cup holder manufacturers or anyone else to that effect. And so what this created was an interesting dynamic around for every sanction that we would apply, whether it's Iranians, banning Iranians from travel or Russians from travel, there was a cyber-enabled counterpunch that could be executed. In this example, you can go off and execute a cyber attack against an airline ticket database and shut down air travel. If we want to ban goods from entering a particular country through sanctions, there's a cyber-enabled counterpunch. You can go off and execute cyber attacks that go after rare earth elements and other constraints within the supply chain. And if we sanction your oil, then the cyber-enabled counterpunch is a coordinated attack against Colonial Pipeline, refineries, and ships transiting the Suez Canal to cause gas prices to spike. And so this is a world that we have not really understood or really lived in until recently. Because up until this point, there's a very hard line between military targets and civilian targets. But that line has really started to blur starting in early 2020. And now we start to see that at scale with the Iranians targeting AWS data centers in Qatar, in Bahrain, and elsewhere. So what does that mean? Before you get into like the details of cyber and cyber investments and what's happening in the market, most people don't actually have a detailed understanding of how cyber attacks actually work. I know I didn't when I was a CIO. As a CIO, I would read the headlines and I would read about some vulnerability led to a breach. But the reality is that vulnerability was just the front door. What you didn't see was that the safe was unlocked and the bedroom door was open and all the cameras were turned off and all these other failures of controls that went from the front door to the actual effect. So the luxury of joining and spending time within the Department of Defense and now at Horizon3 is I got to really deeply understand the anatomy of an attack. And so as you think about cyber, you think about an attack really in two phases. Step one is, how are they going to get in? What are the doors and windows they're going to find open to get into your house? And to be honest, that's actually the least interesting part of the attack. There are thousands of doors and windows in your own companies today, and it is impossible to secure all of them. So instead, what you realize is every cyber attack starts with access to a single machine inside your network. It doesn't matter if they found a 0-day in your web application, or if they found a vulnerability in F5 or Fortinet, or they bought access off the dark web through an initial access broker. At the end of the day, a cyber attack starts with a single shell on a single host inside your network. And from there, the attack pattern all looks very similar. The first thing they're going to do is try to discover every single server and piece of software that's network reachable. Every host, every port, every service. They're going to look for really interesting servers and applications that are ripe for attackers. For example, if you use data backup and recovery software, that tends to be software you can't easily secure. It tends to be software that you don't patch very often, and it tends to be software that's accessed by administrators in the network. So it's a massive blind spot. So in this example, Veeam Backup and Recovery is one such example of that software. Dell iDRAC, HP ILO, these are virtual appliances that manage storage grids and other things to that effect. So what we're going to do as attackers is look for these landmarks or interesting servers. So in this example, find Veeam Backup and Recovery, get code execution, and gain access to that piece of software. From there, I can access all of the user IDs and passwords that are stored within that piece of software. In fact, that software stores user IDs and passwords in clear text in memory. It's not even encrypted. So once I gain access, I can look at every user ID password pair. Now I've got a bunch of valid credentials. And attackers don't hack in like they do in the movies. They log in with user IDs and passwords that they've stolen from a variety of areas. And this is the typical way people are going to compromise you. Now that I've got a valid user ID and password pair, I can start to log into neighboring services, log into Windows machines, access your email, go after cloud accounts, and so on, because I've already compromised the user ID password. So in this example, we found a neighboring machine. On that machine was a share drive that had a special file, and that file gave us access to the production Amazon cloud environment. What's amazing about this is, one, our AI hacker executed this attack with no humans involved. That AI hacker had no knowledge of the system, and that AI hacker did not trip a single security alert within this bank. And this bank had every Gucci piece of software you could buy. They had the top right Magic Quadrant for EDR, for SIM, for all the top vendors that were out there. Yet not a single alert went off. Why? Because nobody was paying attention to that Veeam software, and everything thereafter looked like a regular user accessing systems. So the question then is, what do you do about it? Well, the goal of running hacks against yourself isn't to find problems, it's to quickly fix problems that matter. And so what you see customers shifting towards over the last few years, and this has really been great tailwinds for us as Horizon 3, is the desire to hack yourself, to find and fix problems before the bad guys find them. In fact, our swag t-shirts say, "Go hack yourself." They're excellent on Sundays at church. You should definitely pick one up and walk around. It'll be hilarious. So when you understand the anatomy of an attack, you start to figure out where to prioritize. How do I make sure I know how people are using user IDs and passwords? How do I lock down shared drives with passwords stored on it, so on and so forth? And our customers end up focusing on the specific issues that will make it very difficult for attackers to progress. And it's not about fixing everything. It's about fixing the few things that actually matter. And you're going to hear about this as a theme throughout my talk. The hardest part of my job as CIO was deciding what not to fix. That was the hardest job. And so being able to be laser focused on the 3 or 4 things that maximize return on effort is the holy grail in all things cybersecurity. To be honest though, I've never seen a bigger gap between investor hype and CISO pain. And that's actually something else I'm going to talk about today. Does that make sense so far? Okay, cool. So the next part. Our AI hacker hacked a cyber range in 14 minutes. It was the first to ever do so. It would take a human expert 12 to 16 hours to do the same thing. 12 minutes, that's a 50x increase in speed between our AI hacker and a human. But the other important thing is I could spin up 100,000 instances of my AI hacker right now and target a country. go after the banking infrastructure, the energy grids, manufacturing facilities, and so on. I have infinite cyber capacity. I am not constrained. This was a huge challenge when I was at the Department of Defense. We had very few actual master hackers within the DoD, within the NSA, and other organizations. And so we had to be very selective of how we employed those incredibly precious and scarce resources. So we had to be very selective of the target. But with infinite cyber capacity, I don't have to do that anymore. I can, if you ever watched or played video games when you were growing up, I grew up on the old school Nintendo. If you ever played Contra, with Contra, you've got limited ammunition. You're gonna, be very careful who you shoot. And then you're gonna type in up, up, down, down, left, right, start. Everyone knows that Konami cheat code. You've got unlimited ammo, and it is full auto all day, and you're gonna crush the level. That's what AI hackers are bringing to the table. At least we're the good guys. But we know the bad guys are pretty close to catching up. And so if the enemy has infinite cyber bullets, and that's their cheat code, they no longer have to be selective of targets. So back to the cup holder story. They had to be very selective of the one limiting factor in all of Toyota's manufacturing. But they don't have to do that anymore. They can go after everybody. In fact, that's something that we see. With unlimited cyber bullets, I don't have to go after Boeing directly. As a hacker, I can go off in that 25-person gear manufacturing company in Ohio, or that 300-person design firm in Tokyo, or whatever else. And so as attackers, I can go after the weakest link in that supply chain. And this is what we're seeing in this era of cyber-enabled economic warfare. In fact, Pat Opet, who's the CIO or CISO at JP Morgan, last year at RSA wrote an article on how he feels pretty comfortable in the security of JP Morgan as a bank. His biggest risk is all of the third-party suppliers he's dependent on, because he has no confidence in their security, and nor does he have any influence in their security posture. So suddenly third-party risk management is an incredibly important problem to go off and solve in a very thoughtful way. An example of this, I keynoted Black Hat last year with the NSA, and it was the first time the NSA spoke on stage with a vendor. And the story we told was we used our AI hacker to help secure the defense industrial base. And we worked together to go after the long tail of small and medium-sized suppliers to the Department of Defense. And in less than 5 minutes, our AI hacker found the 3D CAD drawings for Nimitz-class aircraft carriers and Virginia-class nuclear submarines from a 200-person design company in Virginia. Less than 5 minutes. We separately had a 9-year-old kid use our product to hack a bank in 4 minutes and 12 seconds. The barrier for entry has dropped dramatically as well in this world. And this is pre-Mythos. This has nothing to do with LLMs. This is just straight up advanced techniques around fit-for-purpose, specialized AI hacking systems that we went off and pioneered. But now there's a really interesting challenge with LLMs, with Mythos, and so on. So what happens is, as a CIO, when I was at GE Capital, I was focused on insider threat. I was then focused on my software supply chain, my third-party providers. There was a lot of stuff I had to go off and deal with. And that was before suppliers, distributors, shadow AI, and so on. So the attack surface as a CIO and a CISO has dramatically expanded, not only in the last 10 years, in the last 10 months, right? And it's only getting worse. And that's in addition to me having to try to stop people like that in my company from adding to the problem and making it even worse. Because you always have humans as the weakest link within the organization. So once again, this is pre-LLM, pre-AI, pre-Mythos. So what does Mythos and other LLMs bring to the table? So as an attacker, what I'm going to do is look for interesting software that's going to give me access to your network. I rarely am going to find 0 days in bankofamerica.com. But what I am going to know is these large banks, these large utilities, they all use Fortinet, F5, Palo Alto Networks. They use these kinds of firewalls and edge gateway devices to keep me out. And so that's actually the layer of software that the bad guys primarily target. And so what they're going to go off and do is gain access to source code or firmware from F5. Take that as an example, or Ivanti. From there, I'm going to reverse engineer that firmware and get the actual software code. And there's lots of tools that you can use to go off and reverse engineer the firmware. Now that I've got the code, I'm going to do a diff. I'm going to compare version 2 to version 1. And I'm going to look at every single line of code that was changed in version 2. And this used to take a significant amount of attacker and exploit research expertise to go off and do. We have entire teams in the intelligence community whose sole job is to find these kinds of patch diff-based software flaws. So if you fix a bug, I can go off and figure out exactly what bug you fixed. And then from there, I'm going to go to everyone that hasn't yet fixed that bug and exploit them. That's just really how the world works. This used to take weeks or even longer for exquisite expertise. Now I can take that binary diff, I can take the 2 versions of code, the new version and the old version, I can drop it into an LLM and simply ask, hey, is there anything vulnerable here? If so, tell me what it is. That's all I had to ask. And it will go through and in very accurate detail tell me exactly what the flaw was. And if you use open source models that don't have guardrails, I can then have that LLM build a good enough exploit for me to go off and take that patch diff, build the exploit, and now I can go off and execute it. Does that make sense so far? I'm trying not to go too far in the weeds, but hopefully this is a good level of how these attacker tactics operate. Okay, so great. This is the process. And as a good guy, you saw in the news with Mythos and Project Glasswing and Anthropic, Palo Alto Networks, as an example, was one of those early members. So what should we expect? We should expect that Palo Alto Networks went off and used LLMs to go off and look for software flaws in all their firewall code. It's actually very similar to what Firefox just announced. So Firefox and Mozilla, they went off and used Mythos as part of that program, and they found a ton of flaws in the browser. And then in their recent patch last month, they fixed 271 security flaws, way more than they'd ever fixed before, because they use LLMs to go off and find it. Amazing for everyone on the latest version of Firefox. But for people that haven't yet patched, they now have 271 new flaws that the attacker is going to go off and target. And that's just what the reality of the world is. So if you're Palo Alto Networks, you just found a bunch of flaws. Let's assume for a moment, because they're in Glasswing, so I'm picking on them because they're in that program. Let's assume for a moment it takes about 90 days for them to go off and fix all of those flaws in their firewalls. So sometime in September, we're going to see a massive patch Tuesday from Palo, right? Amazing. And everyone's going to be super excited. What's going to happen on Wednesday? Every single attack researcher is going to do the binary diff, see every single flaw that Palo Alto just fixed, and they're going to massively exploit every single person that hasn't patched those problems yet. And so sometime in September, October, we're going to see a vulnapocalypse is what I call it, right? This massive set of activities. And that is, I'm just picking on them because of the Mythos announcement, but this is how attackers operate. And so what are they going to go off and do? They've already built out pipelines for every single major piece of software that is ripe for targeting. Ivanti is a high contributor for CISA KEVs, the known exploited vulnerabilities. These are vulnerabilities that the intelligence community has concluded are being massively exploited around the world. That is as big a flare as you're going to get of there is a problem here, you need to fix this as soon as possible. And so what attackers do is they've built out all these pipelines for all these major vendors. And as soon as a new version of software drops, they'll do a diff, compare version 1 to version 2. Let's go figure out what the code changes were. Let's go build the exploit. Let's go test the exploit. And then let's add it to the rootkit. And then they get the signal to unleash hell. And they go off and execute against the organization. With automation, you can build an infinite number of these pipelines. So not only do I have infinite cyber bullets, I now have infinite vulnerability research capacity. And the combination of those dramatically changes the equation from a cyber security standpoint. Does that make sense so far? Any thoughts, any questions so far? We can save for questions at the end. I'm probably going to go way over time, sorry. But I'll do my best to end in a few minutes. And we'll hang out later to talk too. All right, this isn't all about doom and gloom. I just spent a lot of time talking about it. That's how I mustered demand for the business. So when you think about CISOs, the problem is when a CISA Kev hits the newswire, that is a big flare. And as an organization, what you want to do is treat any Kev like an outage. It's no different than your mainframe crashing and your website is now down, or your financial transactions are now down. Organizations take those Kevs, they stop the presses, and they go off and fix as much as they can possibly fix. However, the reality in the data shows that 50% of sysadmins are still exploitable nearly 2 months after it hit the newswire. And so you have this massive logjam across all the big banks, all the big insurance companies, all the utilities, government agencies, of this huge signal flare of an issue, and no one's moving fast enough to get after it. Does that make sense? Okay, so what do? At JSOC, we used to talk about the future operating environment. And what we would think about is, okay, in what world must our operators execute? And in that world, what are the characteristics? And how do we make sure we work backwards and do the training and exercise and build the muscle memory and the capabilities to operate in said world? And so that's what we talked about from a cyber standpoint. But that's no longer the future operating environment. It's now the current operating environment. And there's 3 fundamental characteristics. Number 1 is that attackers are no longer constrained by capacity. They have infinite cyber bullets. The second part, to summarize, is they can reverse engineer a patch, build an exploit, and do mass exploitation in hours. Roughly about 2 hours is probably the fastest in terms of download the patch, build the pipeline, do the diff, build the exploit, and then begin to execute. You have 2 hours. That's it, from when Microsoft releases a patch to expecting it to be mass exploited. And then the third is that there is no longer a distinction between civilian infrastructure, military infrastructure, and commercial infrastructure. Everything is on the table. So the world today is dramatically different than it was a year ago, definitely more than it was 5 years ago. And I think this is going to become the norm going forward. So the world of cyber as an investor is going to be quite lucrative. It's also going to be incredibly painful for all of us. And so the question is, what do? It has never been tougher to be a CIO or CISO than it is today. Thank goodness I'm not a CIO anymore. Like, it would suck to be in this job trying to secure and defend GE Capital. But the other part is it's never been more important to be a trusted partner and trusted advisor. And one of the things, as you think about your portfolio companies from a cyber standpoint, if you're founders in cyber and so on, is cybersecurity selling is not email spams and steak dinners. It's reference-based selling. It's all about that last mile of trust. And as a CIO, I heard my buddy down the road is also using your tech. Amazing. I'm going to go give it a try. Reference-based selling, channel partners, channel reselling, that is actually the most important way to build distribution at scale in cyber. And it's actually one of the key X factors and differences between cyber go-to-market and commercial go-to-market or business analytics go-to-market or so on. It's very much a relationship and trust sell. Very few companies did product-led growth and self-service purchasing and things like that in cybersecurity. Everything's about cutting through the noise through reference-based selling. So I'll end with, I've got tons of more cool stuff to talk about, but I'll end with, what is it that we need to go off and do as a community for these CISOs? I mentioned before, the hardest part of my job was deciding what not to fix. I think over the next 6 months, the ability to accurately prioritize and distinguish between what's vulnerable and what's actually exploitable in the environment becomes the single biggest pain for every CIO and CISO in the industry globally. Because they have this massive wave of vulnerabilities that are going to hit them. Most of them aren't even exploitable in their environment. Just because I've got a piece of software that's got a flaw doesn't mean the attacker can get to it and do anything about it. You've got lots of layers of controls in place. So helping you decide what not to fix and prioritization is the single biggest pain that CIOs and CISOs are going to suffer from, especially over the next 6 months, but I think that's going to be enduring. The second big thing here is that you spend millions of dollars on security tools, whether it's CrowdStrike or SentinelOne or Splunk or so on and so forth. Just because you spent money on those tools doesn't mean the tools are actually working. So how do you verify that CrowdStrike's configured correctly, that Splunk is configured correctly, that the next cool agentic whatever thing you got sold is actually working in the environment? Don't trust that your security stack is working. You've got to verify. And you've got to hack yourself over and over and over again to understand whether you're actually secure or not. And then the third part is you've got to prove to the cyber insurance committee, prove to leadership, prove to auditors, prove to regulators that you are resilient. And the reason why that's important is you can't trust, you've got to verify. You've got to show those results over time. So everyone's got a plan until they get punched in the face. And in cyber, the attacker's perspective is the perspective that matters the most. So I hope this gave you a good set of ideas. Thank you for the time and the opportunity. I'll see you. Yeah, we'll take some questions.
Also, I just was grading pitches here. So if they decide to come in right away, we'll just make way for him to get to this table, right? Okay. Otherwise,
Thoughts, questions?
thoughts, questions?
Yesterday, the big news, the President Donald Trump went to Libya, and he banned Dario, all the presidents have 6 months from years, he doesn't do it. What happened? What did he do? Or what is he doing?
Yeah.
If you repeat the question.
Yeah, I'll repeat it. So let me elevate the question to, there was a controversy or a pretty public fight between Anthropic and the Department of Defense, right? What happened? So I've expressed opinion on this problem as well. So let's take the emotions and personalities out of it for a moment. When you look at the sequence of events, you had the Maduro raid happen about 2 months ago now at this point. And in that raid, Palantir was used as a technology stack. And at least from the news reports, Anthropic asked if Claude was used as part of Palantir. And it was. And people at Anthropic, I guess, didn't like it. And they raised concerns. That led to a question of, if at any moment, if we're in a fight, could a technology vendor disable access to their software? Yes or no? And in this case, the question was, would Anthropic disable access to Claude in the middle of a war? And if so, that's a really big deal. And it's a big deal because you're now introducing risk to the warfighter. And that's really the crux of the argument if you cut through the emotions and stuff. I will tell you firsthand, I personally saw failure of technology lead to loss of life, personally, when I was at the Department of Defense. It's a really big deal. If there is any way to reduce risk to mission, you have to do that as a weapons platform provider, as a technology provider, or whatever. And if the risk to mission can't be controlled, whether it's personality driven or policy driven or whatever, you've got to cut that risk out. And so if you're the warfighter, there's no way you want technology from a provider that could shut it down at any given moment. And that's really the crux of the argument. And so the risk to mission is so consequential when you think about how deeply embedded a model could be in intelligence collection, in decision making and mission planning and mission execution, that you've got to eliminate that risk to mission however you can and focus on suppliers that'll actually not change access to a piece of software in the middle of a fight. That's probably the most level-headed way to explain it. Okay.
Thank you so much. That was exciting.
Awesome. Thank you.
I think we've learned a lot. You know, sometimes people ask me, where do we gather brilliant speakers like our keynote? And I wanted to say, because I have so many friends, and Vish, if you stand up, please. So Vish has been a supporter of GTS for over 20 years. Thank you, Vish. And now, another thing people know about this event, that we always run on time. And because all the speakers, I know we could be talking to our keynote forever, that's why I don't take a lot of time myself. Let me introduce my friend Keith Koo, who has created a beautiful panel. Actually, you will describe the panel. Keith is a Silicon Valley Insider host, and I also understand now you're Vice President of US Capitol. Okay, I won't take your time, right? Just come on, introduce your panel, let's get going.
Brian is the leader of Expert Dojo, has made 260 individual startup investments, all privately funded, and also a director of the Nathan Family Office. So I think we're going to have a really, really exciting panel. I appreciate each and every one of you, and Sasha, thanks again for this opportunity. I'm going to take my seat next to the panelists. All right. Let's make sure the mics are working.
Testing.
Are we good?
Hello.
All right.
Excellent.
So, I do want to start off with just getting right into it. When we go to one of Sasha's events, if you see the room, you can see that almost everybody here is not just some ordinary investor. Everyone's been in this 20, 30, 60 years. And so what I wanted to start off with is just getting right into it. And we're going to start with Uli, then Charles, then Brian. What is something that you've invested in or looked at in the last 6 months that you wouldn't have touched 3 years ago?
You know, you prepped us with that question, and now that I'm thinking about it, I kind of look at it a little differently. You know, as a family office, we're able to sit things out, where a lot of you fund managers and allocators aren't able to do that. You need to keep your capital deployed, and you know, we don't have to. We can sit on our hands and wait it out. So that's something that in this somewhat volatile environment we've been doing, but at the same time we're also taking a little bit of a contrarian approach and seeing where there's some dips where we can then also double down.
Thanks, Uli.
Trophy assets on the secondaries, we're looking at that differently. Also on our platform for other family offices, we're getting calls for access to those secondaries. Either if it's continuity funds that are seeking liquidity, and you could get there's family offices that have exposure to, let's say, commingled strategies or single companies, and they know, let's say, a sector, if it's longevity, health tech, or energy sectors, and you have a fund that or strategy that is seeking liquidity, getting access to that, you already have exposure, and you just want to double down to something you know.
Let's stay on that, because I think secondaries is a very interesting subject, certainly in the last 10 years or so. How are family offices considering secondaries? Who are they asking the questions of? How do they know what they want to actually get into? Is it like you said, longevity-based, certain verticals, or do they have what's the latest thing happening in Andural or Anthropic? What are you thinking of?
Well, there was a survey done, I think it was UBS and JP Morgan, this first quarter 2026, around increased allocations on alternatives. And under alternatives, it was VC and equity. However, VC and equity, there's a divergence happening. Are you going to go into commingled, or are you going to go into the companies, the strategy of VC, and get direct access? And so this is where the last 5-10 years, you've seen a lot of the VCs becoming RIAs to provide their LPs, right, access to those deals, because the LPs are demanding, the family offices are demanding. As an example, I mean, Uli, you got direct access to companies. Like, why do I need to go to a VC to get access to a company? I mean, I just walked down the street from my coffee shop and I got access to deals, right? So you're seeing a lot of that happening in the West Coast, but also globally.
You know, we're being more selective, and something that the previous speaker had talked about was restraint. And I think that's something that keeps echoing, because we may have access, but we're really more interested in selection.
That's a very good point, right? And so that's the trophy assets that we've had access to, say 5-10 years, that were co-sponsored by the PayPal mafia, as an example. We've had access for that for decades, right? But now some of those deals are coming to fruition. There's talk about multi-trillion-dollar IPOs, and so now that we've had access, well, we could get a little tickle to those single assets on the secondaries, and that's the rise of those platforms are happening now.
Thanks. Brian, same question. What have you looked at in the last 6 months that you might not have touched in the last 2 years? And then piggybacking on anything that Uli and Charles have said.
Yeah, for sure. I mean, first of all, Nathan Family Office, pure real estate for 40 years. Probably one of the ones closest to here is Copper Valley. We bought Copper Valley from David Murdoch many years ago. So it's about a 4,000-acre town that we own just outside San Francisco. And so we didn't know anything about venture capital 10 years ago, but we loved venture capital. I still love venture capital. I think venture capital is like the greatest asset class in the entire world, like period, when done properly. But we struggled with the concept of how venture capital was done. Like, we didn't understand, like, why does everybody get 20, whether they're a great fund manager or a terrible fund manager? Why if somebody's losing money, they still get management fees? Like, shouldn't people get fined? I actually think people should get tased. I've thought about this. I actually, Liquid Death did this years ago. They did a taste test where they said, you get, for all of the haters of their product, they said anyone who is right and they choose us as being the worst water, then we'll give you $1,000. But anybody who's wrong, we will tase you. I want to see tasing brought back into venture capital. But we just didn't understand it. We didn't understand, like, why has nothing changed in years and everything is all of our children are special and they're all great when they're not. Right? So we thought, let's do it ourselves. So at the beginning, we just started out as like an accelerator. We thought, we love Y Combinator. We think they're the best venture capitalists in the world as far as returns. And we thought, cool, we like this. They do it the same as real estate people. They buy on price and then somehow convince other venture capitalists to pay 10 times that price a month later. And so these guys are awesome. We want to copy them. And then we just started doing first principles all the way through. But the biggest change, to your point, is I never thought as an accelerator that we would become a private equity firm. And like in a bizarre way. And so this market is so different, so distinct, so unlike anything we've been in before, that I think we all have to transform. So in many ways, we've gone from what we thought we were, which is an accelerator, to becoming a private capital firm disguised as a private equity firm.
Give us more on that. It's a very unique situation.
That's a very good point.
Yeah, I mean,
actually, the reports that I was reading last 2 months ago, they combine the VC and private equity, growth equity, as one asset class.
It's the same, like a trillion-dollar company, like what is that? And who makes these valuations in the first place? Is it like the same people who are benefiting from the upside and the valuation? So for us, look, when I talk about something, it's to stoke an important conversation, please. It's not to insult anybody. So many of my friends are venture capitalists. It's not about particular people. There are amazing people and bad people. But we had this, when we first looked at venture capital, we liked it because we had this phrase that we used internally, which is that venture capitalists, or venture capitalism, is an industry of soft hands. And we love industries of soft hands because that's a way of being able to really be able to break in and make a big difference. Real estate is not an industry of soft hands. If a building is going to crap, then everybody gets stuck in and everybody's like mixing the cement, everybody's putting the windows, you do what you have to do. So I actually think VCs are going to become co-founders. And so 9 months ago, we had one of our companies. I love the founder, I love the product, I love what they're building, but he was sucking on growth. He's a tech guy, founding team of Microsoft Azure for technology, same with Raymond James, but he couldn't do growth. So what are we gonna do? Are we gonna let a company that we know could be $1 billion company fail? Or do we actually put more money in, or do we step in as co-founders? So yeah, I think one thing I never imagined that we would be as a VC and as a family office is actually co-founders in companies.
Right, and I think we can do a whole nother show and panel for that model, but thanks again, Brian. I think it is a very good perspective that you have on all this, and I mean, I always learn a lot from each one of you. I do want to circle back, Uli, because you kind of started talking about patient capital, and I know that right now, I mean, we're in a bit of flux. Charles and I usually talk about how volatility is good for the middle market investment banks. But going back to patient capital, how are you looking at things with the geopolitical right now? What are some of your thoughts in how you're evaluating what things that you're staying in and things that you're looking at and things that you might be exiting?
Well, I'm still wondering if a guy with a taser is going to come sneaking around here. And,
very illustrative, I know.
That's a very good metaphor. You know, two things come to mind. One is we're in the luxury goods business, and I've just seen LVMH drop by 27% since the beginning of the year for a variety of factors, right? So what does that mean? How long do you have to wait? Perhaps it's a good time for us to, place a couple of bets in that space. So I would say that's one example. The other is we're now in a very defense-oriented investment mode when it comes to certain tech. And as we know, huge investments go into things like that that often don't pay in a way in terms of long-term until the next generation comes around. It's a little like what we see in real estate sometimes too. It takes a couple of different developers until an asset finally starts making money. And so we're looking more at civilian use, fire suppression, police force, this kind of a thing in terms of where that technology will be applied once things come back to a steady state. So I hope I'm answering your question in that space in terms of where we are in terms of a longer view.
Yeah, and I don't want to take away anyone's thunder because I know Sasha has a packed agenda, so I know that defense will be talked about, AI will be talked about, so we're not going to get deep into that. But it is interesting, especially with families and VCs, on how they frame what, I think they have to be very intentional right now in terms of what are we getting into, what are we not getting into. And so again, I don't want to take away from the discussions happening later this afternoon, but it's good to think about. Charles, of course, you see structured deals all the time, and you said this a little bit earlier. What are you seeing in terms of, in case of families going direct and bypassing a fund? What are you seeing in regards to that?
We're seeing a lot of demand for direct company investments. Just like you said on the accelerator side, that's a direct allocation to companies. You get to review different founders and you are on the ground operating, or I know, Uli, you're doing a lot of mentoring to some of your allocations and your angel allocations directly. That's operational. So I'm seeing a lot of the family offices, regardless of if it's emerging family offices, $500 million or more, or second gen, third generation, right? Their operating costs are less than 1%. So the originated transactions, very difficult. So they're relying on advisors. But then once you get that transaction direct, there's a lot of direct participation and structuring happening with these companies specific. And that's building up. So you see, instead of a family office that may have traditional real estate at 30%, then you have 30-40% as an example in the markets between fixed income and equities. Then the balance, 30%, the real alternatives, is not the TPGs or the KKRs per se. It's direct companies. It's direct companies. And they're actually taking either a growth equity, private equity, or an early stage investment in those direct companies is what we're seeing.
Yeah, this is interesting. And so, Brian, you sit in both Startup Accelerator and you sit in family office, long-term real estate. Are the conversations separate, or are they actually converging when you actually give advice?
We just want to make money. Like, we just want to make money. Like, you just love money. And so I think what happens internally, especially when it's your own money that you're playing with, is that you feel every dollar. Like, all of that money was hard earned and worked for. And I think sometimes when the amounts of money that are big, like this whole Anthropic and OpenAI and SpaceX, like, God bless them, but like every single pre-seed VC has an allocation today, right? It's like watching El Chapo outside the school gates. Like, everybody's a drug dealer. And it's like it's this crazy moment that we have, which is like a George Foreman grill moment when he's had his 12 kids and suddenly he needs to come back to get more money. And I think it hurts us because this place is a reverent place. It is a place where all great innovation comes from. And so, like, as a family office, there's like two parts, right? The first part is legacy, and what is the family office known for in the future? I know with Copper Valley, we want that to be one of the most epic towns ever built, and we want to be a driving force in doing that before we pass it on. When we got into venture capital, we believed that there's no reason there shouldn't be 30 to 50% annual returns. There's actually no reason why there shouldn't be 100% returns every single year. The problem is everything's off. The prices are off. Like, how is a company that does $20,000 a month in revenue worth $10 million? Like, honestly, where did that even come from? And then why is it okay that we then get diluted by 10 times more by the time it gets to the end? Because everybody is throwing so much money at these companies. And why is it okay that, like, awesome entrepreneurs with brilliant products are getting destroyed by these mini Ponzi schemes just because somebody gets a $12 billion pre-seed for their birthday? Like, it's just wrong. So I'm just saying, like, I think this is amazing, and we want to make money, and there's huge money that can be made in venture, and we measure it every day. And I have chased down personally, if I have a founder that's going slowly, I don't care if I put a safe note in, a convertible, I'll ask them for my money back, right? If they're going slowly. If I get somebody who's like, just this morning, I'm like, yo, dude, where's my money? And he's like, well, we failed. And I'm, what are you talking about? You're only 27. Like, I want my money. You're going to do another company. Great.
Sounds like Thanksgiving conversations. Where's my money?
Yeah, because
Sounds more like Goodfellas than it actually sounds.
because it's real though. Like, money is something that should be respected, and so that's the only point. That's the only thing I'm saying here is like, this place is the most.
That's why the
special.
LPs are going direct now.
That is why the
That's what's
LPs,
happening.
because the LPs, a lot are like us. We're like, hey, we don't know anything about venture, but like, honestly, is it really that hard? Like, we find a company that's loved by a customer, we get a product which is in a big enough market, like, hey, there's a lot of cancer. Hey, this is an amazing person who's like been in cancer for 30 years. Hey, this is a drug which is like at a certain stage that you can see it. Like, there are clues to success all the way through. So I just think, like, firstly, we're going to see more and more and more family offices become experts, because it's not hard to beat 10 or 15% returns.
That's what we're seeing actually a lot at our firm as a platform, is instead of the commingled kind of private equity strategies, which was the vogue 10 years ago, we're seeing the rise of these sidecar deals, the SPVs, and it's on demand with the family offices co-investing. Let's co-invest together. You know, if it's a $20 million deal, let's each of us pony $2 to $5, and let's go for the ride.
Actually, can I ask one last point? I think the real power is going to move into the groups of high net worth individuals.
Yes, yeah.
Like the Tiger 21s, the Legacies Alliance, because these people trust the people around them. They sit in rooms with people who are protecting each other and giving each other great deals. The answer is not to go alone. That's nuts, to go against like the huge amounts of money that is with some of the larger stage firms. But it's also not to be a firm that's bringing in 10 to 15% returns. Just like buy houses. It's better and it's easier. But these groups, they're going to be powerful, and they're going to be deploying massive amounts of money.
And I think for all of what the three of you have said just now is that, and I know a lot of people in the room as well, and they have funds, that back to like, why does everybody invest in the same investment, whether that's right or wrong? But it is word of mouth. I mean, I know that many deals get done because you get direct access and you trust the person that has that. So I think that is a reinforcing function. I do want to come back really quick to the thought that we are putting a lot of money in certain domains. I mean, we're Silicon Valley. There was a lot that was talked about in terms of how much AI investment's happening here, and that if you stripped out the AI investment, the amount of actual venture outside of AI, even in Silicon Valley, is very small. We call that concentration risk in banking. How are the three of you, we'll go back to Uli, how are you thinking about spreading that risk out? I mean, because it's such an AI-driven thought, and like you said, Charles, everyone wants to get into the same deal, and Brian, everyone's on the same deal. How are we actually thinking about spreading out that risk? We'll start with Uli.
Do you want to rephrase that a little bit?
In terms of how you think about your portfolio, and everyone's unique and individual, so much has been talked about investing in AI, and there's some concern that there's concentration risk in AI itself. How are you possibly mitigating that?
It's a good question and a valid question. I think many of us look and see where the AI is applied and where it's making a difference. I know that's kind of a naive response, but at the same time, it's pretty straightforward. I mean, you know, AI has become a little bit of a commodity, and I think many of us also look at data centers as well as, you know, how does this financially make sense? It's going to be obsolete, and, you know, how's that going to work? So instead, what's being actually created with this? I think that's more where we're looking.
Right. I mean, it is SF Climate Week, so we can go down a whole nother rabbit hole.
Well, and same here. I mean, same to your point, actually. It's not just AI direct, but AI indirect, like use cases in energy or health tech, right? So there are a lot of transactions we see where AI is part of it, but it's not dependent on that.
Right? Yeah, when the Middle East is doing a $42 billion data center build out, or when Oracle's doing a $42 billion data center build out, or when Meta's building a data center in Ohio bigger than the city of Manhattan. I mean, these are all very significant.
And what are the use cases for that? Is it healthcare, the health longevity? Is it energy, right? Diversifying energy on the municipalities and state level, right? So that's how we're not going direct on the AI. We are seeing transactions on the periphery, right?
And also, I mean, we're seeing totally unexpected investments, or not people had predicted earlier, when certain companies invest in energy, or when health companies or pharma companies are investing in health tech, right? We're seeing all these transactions happening right now. We can't even imagine, well, we can, but we're in Silicon Valley, but what things are going to look like in the M&A world coming up as well.
But AI is not AI is obviously transformative, but like AI is not the thing. Like AI is just internet in 1990s. Like it's not the thing. The thing is the stuff that the customer needs to do. Like OpenAI are not AI. OpenAI are just kicking the backsides off KPMG and Deloitte and all of those guys because they can give BI on a better level and on a higher level and do it quicker. Like it's not AI itself. I think even chasing AI, like I always remember even just when like some of the, I won't mention names, but like some of the competitors of OpenAI came out and I'm like, really? Like, you know, $2, $3, $4, $5, $6, $7 billion pre-seed? Like, how does it justify that to actually get there? And so, but then I looked and I'm like, I don't want to play that game because everybody will be diluted. It's like investing in Lyft. Like, it's an awesome $40 billion company that raised $40 billion. Like, how does that work? I don't understand that. But what I do understand is the stuff that's messed up that AI jumps into. So like, P&G was shit way before AI. Right? And they will be terrible way after AI. So it's obvious that somebody's going to come in and disrupt energy, right? International remittances is like the greatest time in the world for developing countries to developed countries to move money. There's more money than there's ever been before. It's harder to carry dollar bills in your suitcase anymore through airports. So everything is going to transfer across borders. India is the fastest growing nation maybe in the world right now, and it's going to be a huge transporter of money. So is Africa, and China is becoming friends with Europe and the UK, so money's going to flow. But their systems are incredibly inefficient. So AI will make those systems of FX really good. So I think it's like data for me. I'm not investing anything in AI, but I'm investing a ton in data because I know when all of these wonderful IPOs come out and everybody's trying to justify $1 trillion valuation for a company that's a couple of years old, then they're going to be like, shoot, we got to buy a ton of companies. And that's when I want to be in Walmart with my product. I want to be I want to sell $1 billion here, $1 billion there. I want to take a company, bring it through.
So it's company specific. It's company specific. You're really
totally. And
company specific.
And AI is just the ATM machine that's going to give us a ton of cash.
Unless the cash runs out. But this goes back, interesting point, Brian, because we're talking about cross-border. This is the Global Technology Symposium. Sasha does this, every year. And I think more than ever, right, we're becoming even more global, and we're seeing it right now with geopolitics. I'm going to direct this to you first, Charles, because Brian just mentioned India. What regions do you think are actually going to flourish out of this next cycle?
Well, it's funny. We're writing an article that will come out in 3 weeks for an investment journal on India, actually, specifically about India. We go to India probably quarterly, and I've seen the mass kind of not just the innovation, but the infrastructure. Every time, now they got a bullet train from it's Noida to different cities. And Noida is a brand new city. 5 years ago, Noida was nothing. It was just a desert, just a few villages. And now it looks like a West Coast city, brand new city. You're seeing the middle class, right? India has a growing population, a thriving population, and unlike different parts of the world where some populations are declining, India has growing families and a middle class. So there's a consumer, supply, infrastructure. The only thing India doesn't have, which is an open secret, is energy, right? And so that's where we're seeing is, well, where we're gonna, and we're seeing a lot of demand of family offices via Mauritius and India into LATAM happening right now. LATAM specifically South America for energy diversity, and also into the United States.
Thanks, Charles. Uli, what are your thoughts? And I know you have a very European leaning, but what are you thinking?
So there are a couple of things. One metric I'm able to follow is where luxury car sales take place. And to echo what Charles has said, India is in our top 10 markets worldwide and may actually break into the top 5. And you've got to remember, with tariffs, you're paying 2x in India for a luxury vehicle. So
and they're buying. And they're buying.
Yeah. And I mean, that's a whole cultural thing around that. Also, we've been able to carve out the The non-automotive branded rights, so we do the Maybach boutiques worldwide. We've got shops in Egypt, 2 in Poland, 2 in Turkey, 3 in India. So these are other data points in terms of what's telling us where the market is for this kind of a thing. What you had said about this growing middle class India, really a growing corporate demand for talent and also for leadership. So we see an investment on the HCM side, on the human capital management, on the talent development, the leadership development, that really our personal mission of mentoring has almost transferred more to that to build this capacity within MENA and countries like that and areas like that. So that's been a really interesting place for us to also allocate.
Thanks. Brian, before you go, I just want to take a moment to say hello to honored guests. I know Sasha will talk more, but we have Pitch Johnson and Bill Draper right in front of us, living legends in the VC community. So just want to take a moment to recognize them. Hello, sirs.
I got to get a picture of this. You guys are legends. First time that panelists take photos of the audience.
Okay.
Check the audience.
All right. Okay. So once again, enjoy both of you being here, and thanks Sasha as always for having them. So Brian, back to you. What do you think is a region?
India?
I mean, you've mentioned India.
Yeah, and by the way, you just brought up something very poignant. Like, for me, San Francisco, Silicon Valley is a religion. Like, all of the innovation of the world has come from here for so many years and should continue to come from it for so many years.
The Beatles came here, they got inspired. I mean,
I'm just
come
saying,
on,
so
everybody.
when we go back to the period when this stuff began here in venture capital, this is when it was extremely pure. So all of my comments are about trying to get back to that place where the innovation is the thing that's adored and the thing that's given the flame, I suppose, to become what it could be. I think sometimes just too much money becomes a cancer, and it actually hurts us the opposite way. And so that's like all of my comments about this. I love India. I think India is awesome. I can give you 10 reasons why we should all be investing in India. Like, number one, IIT, 23,000 kids. It's not just the 23,000 kids that come out every single year. It's the fact that 1 million try and get in the first place. Like, IIT go to 4 decimal points to try and find out who gets into their college. You don't get in because you're rich. You don't get in because you're special or because you did some favors. You get in because you're the best students. Number two, it's not like India are becoming a first world nation. India were doing just fine before the Brits. not that I'm saying anything, but like they were, not many people know this, but global GDP of India was like 30+% back before the British came in. What was fascinating was when the British left, global GDP for India was 2%. What is more fascinating about behavioral psychology is 20 years later, after the 2%, global GDP was 1%. So that is the damage that colonialism can do on a place when it comes in. However, what that did was that sent Indians all around the world to become the strongest diaspora that exists anywhere from a power position. If we look at the wealthiest, most successful people in the United States today, they are Indians. That is why I feel so strongly about what our president is doing with H-1Bs and everything else. It is a calamity for us not to have those people bringing the technology coming through. So at the lack of that, I'm hunting in India. I want to find the kids before they come to Perplexity. I want to get them when they're over there. I want to get them outside IIT, and then I want to bring them over the borders. The money is in the bridges right now, and if it's not IIT, if it's not the fact that the diaspora are so used to building unicorns, if it's not the fact that they're going back, if it's not the fact that there's such a huge amount of educated, strong people in a massive consumer market, it is because Indian moms are absolutely terrifying. And so the pure terror of a child going through that for 20 years is not right?
How many IITs are there? Is it
Yeah.
8 or 12? I forgot how
No,
many.
but they're like, it's amazing. These children, they have to be.
It's an MIT. Every single IIT is an MIT.
Yeah, they got to be an engineer, they got to be a doctor, or they're out of the family for generations, right? Our kids get told how amazing they are all the time, right? So we have no chance. And I literally swear to you, I told my child, I'm like, you have to hire Indian people and pray that they don't realize that you're not as good as them. Like, that is your entire plan going forward.
As an Asian American, I tell my kids the same thing.
By the way, the stats are also good. Indian unicorns, like 5 or 7 years ago, it was only 5 or 6 of them, maybe 10 or 12. But now there's like 140, 150.
Oh, it's amazing. No,
My prediction, I think India will have over 1,000 unicorns within the next 10 years.
I'm going to have you review our article before I send it out here.
He's taking all your IP.
I like India. But
You may co-author it.
I even dressed up in local outfits to try and get startups.
I will say, because I'm Chinese American, that I'm going to amend it. I come from Shanghai, so I'm not from Taiwan, but Taiwanese Americans as a category still beats Indians as a category, but I think you're right. All of it is going to be phenomenal growth for these regions, and I think that's a really good thing for the whole tech industry. One thing I wanted to go on to is a kind of a controversial question, but I'm going to start with you first, Brian, and then go this way. What are family offices, from your perspective, can you sit on both? What's a criticism of family offices that GPs actually get right?
So sometimes, like, folks move too fast. And we took our time at the beginning, and I think we got lucky. And I don't know that it was a great strategy. Like, we started out thinking we want low prices, great, let's do an accelerator. And then we were thinking, oh my gosh, we hate dilution, let's do warrants and options, and we love those things. And then we're like, well, we're not involved enough, so let's build a marketing company and give it for free to our companies, and because we're just control freaks. So we were just very lucky, and I think it's very easy when a lot of wealth has been made and someone is sitting on that wealth and they want to deploy to make decisions in an area that there's not a lot of expertise on. And so I think that's a very fair criticism of, like, a general partner saying, hey, you should come with funds because otherwise you might move too quick. My counter to that would be that the answer isn't this and the answer isn't this. It's in the middle of actually really bringing in the right expertise around you to make the right decisions.
Thanks.
I mean, to piggyback on what you just said, really execution risk on the capital deployment side. So from a founder's perspective, they sometimes will feel confident, comfortable to work with an institution that already has the commingled capital under management and directive, rather than a few family offices. But there's there you got the governance. You have valuation issues. So that's the kind of pitfalls from the founder side that they have to watch out for too. So execution risk, the GPs do get that right. There's less execution risk, but there's benefits and perks we've seen working direct with the LPs.
Inconsistent and maybe personality driven.
And one thing I wanted, just a general question, because I know right now for some view of crypto winter, has your thoughts, and I haven't asked you, Charles, have your thoughts on where blockchain and crypto, it's kind of fallen out of fashion because of AI, hasn't really...
You don't want to ask us what family offices think about GPs, that's correct.
Yeah.
Come on, it was on the prep list, Keith. Like, we've all studied it, and it's the funnest question.
Go ahead.
So, like, okay, so tasing maybe is too far. But I do think that, like, if someone is a general partner and they're coming in, firstly, I think there should be no management fees at all. Why does somebody need a salary, for God's sake, right? I think also, number two, if someone is, I actually think someone should, if you really want to be a great GP, come in and say, here's what I'm going to do. Okay, you put the money in right now, but here's what I'm going to do. You can take a personal guarantee on me. And if money gets lost, I owe that money. If you want to double down on that, you can include kids and family relatives and other people as well. But I think that, like, part of what family offices think is, come on, man, it's our money. Like, we worked really hard to try and get this through. And so just having a fees and talking about what you're managing, like $50, $100 million, $1 billion, like, come on, I don't care. Well, you're just a fee collection machine. So get rid of fees, take the same skin and the same pain that's been taken, but then take more. Don't take 20%. And so I think that there is huge change that should come, and we as allocators would love to see that change, because then we wouldn't have to do all this stuff that we're doing ourselves.
Don't hold back, Brian.
Don't hold back. I mean, there's a difference in the crypto and blockchain, right? So crypto is the Vegas coins, right? And I prefer to do Vegas than that. And then blockchain is the infrastructure to make, let's say, SWIFT, banking, the underbanked or unbanked get access. It's technology that powers banking, theoretically. We've made investments in blockchain infrastructure on crypto now.
Sure. Yeah. Right. I want to actually take a moment to see if there's any questions in the audience. We'll come back to finish up, but I just want to make sure, if anybody had any questions, you could direct it to any one of the panelists, and I'll bring the microphone around.
Right here.
And then please introduce yourself.
Hi, I'm Sheila. I am looking to establish a fund, so now I'm thinking twice, but regardless, happy to have a separate conversation with you. I've been talking to Charles' team quite a bit. But anyways, my question to you is a little bit contrarian to what you were saying in terms of India. India's moved from fourth place in the order of countries to sixth, and that just happened last week or 2 weeks ago. If you look at the rupee has fallen so much compared to the dollar and is expected to still move further down for another 2 years. A lot of foreign capital is actually moved out of India. So how are you still so optimistic? Because when I talk to people in India, there seems to be a little bit of a question mark in terms of where the country is going, what the regulation is, how much potential it really does have, and the returns. A lot of people in capital is actually leaving India right now. So how are you so optimistic?
For me? So, look, currency, if it's Nigeria, for example, we're invested a lot in Africa. Nigeria terrifies me, as do a lot of places in Africa, because I don't see a bounce coming up and down. We invested in Beehive very early in India. Those guys are going to IPO next year, and I think they'll hit unicorn within 2 years. We invested in Mugafi, who are building the Disney, which it took them 100 years to do it in 10 years. They're going to hit unicorn this year. They're just about, I can't even say what they're buying. But so we've done really well. India's just been very kind to us. And so you can see, I really like people that are fit for purpose. And so the technology, if this is a technology world we're going into, and I can make very big returns and I lose a little bit of it short term, I'm okay with that. We're not looking to come into India and just take our money out. We're looking to come into India and have it as part of our portfolio that we're going to have around the world. So it's okay. Currency goes up, currency goes down. I remember when Soros crushed the UK pound. I mean, who cared about that at the time? Because it was going to come back up again in the future. So it's about the people. It's always about the people. And by the way, what I'm talking about with funds is singularly the greatest opportunity for funds to break through in the last 30 years. Because this Kaufman report, which I'm sure many of you have seen back in 2012, spoke about exactly what I'm saying. I only saw it last week, but it spoke about exactly what I was saying back there. But when you have incredible mediocrity, it is also with incredible opportunity. All anybody wants is a 30 to a 50% annual return asset class to actually produce 30 to 50% annual returns. And India is a part of this, whether we want it or whether we don't want it, whether the entrepreneur is here going back to India or India coming over here, it has to be a part of the mix. So look, I have 266 investments now. We'll have 1,000 investments within the next 3 to 4 years, and I'll keep building up. And if I have 300, 400, 500 investments in India, God bless India. And so let me answer it in 3 words. I don't care about currency risk. I don't care. Not in India, it's fine.
I want to clarify the capital flows. This is primary, not secondary. So our primary experience with capital flows out of India has been mostly around capital investment. So those capital flows that are coming out of India, they're making significant capital investment, either in middle market companies in the United States, infrastructure, and also they're making capital investments in LATAM too. And those capital investments, there are joint ventures. There's balance sheet uplift that's happening with those companies in India. So the capital flows aren't necessarily consumption they're pissing away the capital, excuse my Bengali, but it's really a capital investment. And that capital investment's very strategic, given the energy and given the infrastructure or lack thereof they have in India. They're partnering up and they're doing technology exchange also in Texas, in LATAM. I'm seeing that with the companies. They are buying, acquiring 51% or more. So,
Gentlemen, I have a question over here.
Thank you. Daniel Kislinsky. I own a group of companies, and one of the companies I have is Selective VC. I'm one of the GPs. We have quite good performance. We're a young investment group. We have 150 LPs and invested in over 100 deals. And performance of our existing portfolio is quite good, so we're very proud for that. So the question, I like your thinking and what you mentioned, especially about the GP fees and all that. So we don't pay ourselves a salary at all. We actually, all in on carry. But how would you recommend to maintain the team if we don't have any fees, just because exits are not happening like overnight, and we need to maintain the best team to bring the best deals and analyze all that? Yeah, so how to maintain the existing team? Thank you.
operating teams.
Yeah, it's not just the fees, it's everything, right? It's about like this to get into VC is a privilege. It's a privilege for me, it's a privilege for my partner, for everybody here. And so to play in this game, it's not just there have to be sacrifices in the fees, but there has to be some kind of balance. All I'm saying is it hasn't been changed in 50 years. And so every single VC coming in with a different deck, talking about like the one unicorn they came from or the one unicorn they sold or the 4 companies, there's no metrics amongst them. There's no metrics. Like it's impossible for me to tell. If you said to me, what's the ranking of VCs here? Nobody knows the ranking of VCs. Nobody knows who's good. Nobody knows who's bad. All we know is that most capital is pretty dumb because 90% of it's going into the top like 2 or 3% of firms, right? And they have no clue why they're investing in these firms. They just do it because it's Tuesday. And so it's not just the fees. I'm just bringing up like really stupid things. If a fund is massively underperforming, then why would they take 2% fees on further deployment? Actually, the current system encourages a terrible fund to deploy more. This is what it does, because there will be more fees. I would rather if somebody that was managing whatever money they were managing.
That's a carousel strategy. You carousel the same asset, you uplift it, and then the valuations.
And most LPs will say privately in rooms, they'll say that most funds these days are nothing more than GP collection machines. And fee collection machines.
Well, there's a lot of litigation around that between the pension funds of the LPs and the GPs right now going on in Delaware.
And so just look, at the risk of being lynched after this, I'm not saying that everybody should get rid of their fees. I'm saying we should reward amazing people. We should have transparency amongst returns that funds are really getting through. We shouldn't have 500 different pitch decks, all with a different awesome thing that fund is doing. Like, we need to actually fix this as an industry.
So wait a minute. I mean, we all know about signal and noise here, right? So, you know, if you've got a fund that's delivering for you, you're going to be happy to pay the fees. You're going to be happy to pay extra fees. Yeah. So, you know, you will know the fund that's performing, right? Because you're going to see at the end of the day who's actually performing. So I'm sorry, I'm going to just sort of excuse some rhetoric here because I kind of disagree. And many of us are in the business and we want to get into the business, right? Well, you better be one of the top because we're all looking for the top decile, right? That's the bottom line.
And to be top, I want to. You said something that was very important. A lot of the strategies now, the VCs are operators, and if they're operators adding value to those allocations should be paying fees, really. So you have to think about that. Private equity model. If you look at the private equity model, they bring in management consultants, and they have the companies pay those management consultants. Well, the VCs, you don't need management consultants. VCs should be the operating value. They should be adding value. And as a result of adding value, that allocation should be paying for it. Why is the LP paying for it, right? So that's what we do a lot of times. We'll advise a lot of the VC emerging managers, add value, don't charge our LPs, because the LPs they're not going to pay for it, right? They want you to be co-founders. That's why you have the accelerator. You're a co-founder. You're adding value to those companies directly.
I kind of wish it was harder to be. Firstly, I love that we're disagreeing. I think this is a real step forward in the panel.
So gentlemen, we have one more question. We have one more question.
Right in the middle of this.
We got one more question.
We reached a whole new level. But I just think also that everybody can be a VC with like a 2-month training program. Like it's a problem. It's a real problem. Like,
Brian, we're going to go with one more question. I think that horse is dead. So.
We're pretty excited over here, man.
Hi, my name is Sheila Nabanja. I'm ED of an education foundation in Uganda. My question is related to the first one, so I think the answer is going to be a quick one. If Africa is projected to reach 2.5 billion by 2030, 1 in 4 people will be African, why hasn't VC allocation sort of switched to reflect that future demand like it did in India? And if it is, what structural risks are being accounted for in that VC allocation?
Who's it for?
I think it's for the whole group.
It's for the whole group.
Yeah, it's for the whole group. I could tackle that for a moment. We have a presence in South Africa through our London office, and a lot of the risk is it's practically geopolitical, the stability there, and that's directly we've seen even with commodity-related transactions that our LPs and family offices are demanding access to. You really have to be operating in country and have full vertical kind of access operationally. So when we're looking at transactions, we're expecting real hands-on locally too. It is challenging. It's different than India where there's somewhat of a judicial system that you could trust. But in Africa, it's...
I want to be really positive here. Can I be really positive? So
for the first time,
our fastest. It's harsh.
Brian has been positive the whole time.
So I went super heavy on Africa at the beginning, and I was like, Africa's got 5 or 6 unicorns. India's got 5 or 6 unicorns. We're going to see what's going to happen. And I put like 30, 40 investments in Africa, and actually our fastest growing company in the Expert Dojo portfolio is a company called Credit, Kredete. Credit are probably one of the fastest growing companies in America, and up until they only raised money because they just wanted to have the government behind them because they're doing so much money right now. But I can't even give you the number. I don't think I can give the numbers because they're not public, but they're just ridiculous, right? No dilution, huge company. We've put like $500,000 in. We're at least up like 50, 60 times, and they haven't even hit their stride so far. So like Africa to me has got like on one side of it, I have them. Also put money into Clasha, who I wanted to be the first female-run remittance companies. And we've had to work really hard on that company, but I still think they'll do amazing things with China. So I like Africa. Africa's got problems though. It has problems as well. It doesn't have IIT with 23,000 kids coming out who are the most genius technologists in the world. I think it needs to. Yeah, you're going to change that. That's true. So look, but that's what I'm saying. That's got to happen because in this world of AI, and that's why, I know GB is my friend from Flutterwave. I know most of the unicorn founders in Africa. I really want Africa to win, but Africa has to build the education of technology to be able to break through. Because right now there was 5 unicorns before, and there's 6 unicorns now, or 7 unicorns now. And so, yeah, I'll invest in Africa if it's a great.
And just because I know we got a few minutes left, gentlemen, I do want to get to what is, really quick. What is one investment that you're thinking about that might be unconventional to the rest of the group?
That could be what?
What is one investment category, something you're looking at that might be contrary or to something that people are not thinking about? It might not have anything.
We see a pricing and sentiment dislocation in the wine business in Napa Valley in particular. Both land and wine prices have been down, and we actually see it as an opportunity. Having already a footprint in that space, we're doubling down.
I had a friend who just bought $30 million worth of McClellan 30-year-old whiskey and is making 30% per year. And it's not a venture investment, but I just want some. So I thought that was a really good idea. Now, I love remittances. And so there's lots of things going to be. It's very easy to get the path through from AI and what it's going to disrupt and see. Energy is obviously super obvious. I'm going data because data is really cheap to get into. We see companies like Clay breaking through really quickly. I think we'll have 15, 20 unicorns that are just going to be be in the whole AI is a Ferrari driving on a dirt road, which makes it not necessary to be a Ferrari. And so the data has to be fixed. The provenance of the data, the enrichment of the data, the matching of the data, all of that. I see like 10, 15 unicorns there. And I think money movement and transfer around the world, India is going to go nuts with UPI. Africa is going to go nuts with movement of money between China and Africa as they're buying it. So yeah, there's everybody in here knows like the stuff that everybody's going to go for. So I think there's loads of opportunity. This is a great market.
Project financing around commodity discoveries in the Americas. I'm not sure if that's in vogue or not, but that's something that we've been strategizing the last 6 months. And we're getting quite a few bank partners in Central America to partner up with us on that, in Honduras and Colombia.
Right. Well, we're out of time, but they'll be available. I do want to thank everyone, Uli, Charles, and Brian. I knew it was going to be a lively panel. I want to thank the audience for being very engaged. And Sasha, many thanks to you for arranging for all of us to be here. So come on back.
Is there anyone in this room who does not know who Pete Johnson is? Okay, I guess everybody knows. Anybody does not know Bill Draper? No, okay. So then there are no introductions needed. You are legends, you are my personal heroes. You're just, oh my God, we're lucky to live at the same time with you guys. That's how I feel. All right, Pete, you go.
Pete Johnson, I met at Inland Steel. We both worked for the same steel company. And then we lived in East Chicago, Indiana. If you've never been there, don't fail to go visit, because it's probably the ugliest city in the world. And we met there, so our friends, our wives, and we became very best friends because there was nobody else in the town to meet, and so that's how I got to know Pitch, and he and his wife became me and my wife best friends. Pitch has a way of charming without seeming that way, charming other people. He and I became best friends, and our wives became best friends. And I don't want to cry because I might get teary about him and his wife, because we really became very best friends. So Pitch is a venture capitalist. He became that without much management. I'm sorry. I thought I was going to introduce him tomorrow, but it turns out it's today. So I hope I haven't said too much about Pitch, because I'm not sure I've got notes about him. He's turned out to be my best friend. He had a lot of friends here in Palo Alto, and he introduced them. Never mind. He became best friends. We became best friends, and
it was a lot of his friends that I met through him. Out here, I was in Chicago and didn't know I was coming. I came out because my father started a venture capital company, and so that's what I ended up my life doing. And who do I need to help me manage a venture capital company, which I didn't know that much about either. And so Pitch and I learned together, and so all of his friends out here became my friends, and we started, what was it called? Draper and Johnson. Good name. A good name. It turned out to be a very successful company that we just made a lot of money, didn't do much work. And it was a lot of fun to work together. So it was lucky that he knew a lot of people around here, because I really didn't. And so he introduced me to Silicon Valley, and we made a great pair together. And I don't think I could have picked a better partner. And I'm almost crying here talking about Pitch Johnson. He's really been my best friend ever since. Thank you.
Pitch, are you going to say something?
I grew up around Palo Alto. I went to high school there, I went to college there, and I went way to business school back east. I got a chance to sign up for executive training at Inland Steel Company. I took the chance and got the job. So the reason we went into each other, we went to work for the same company and moved into company houses, practically next to each other. I think it's hard to think about being good friends and being business partners. In this case, it happened. And the short version is, if you went to work for Inland Steel, it wasn't easy to get a job. They had a CEO called Clarence Randall. And the guys that went to work for the company were called Randall's Rangers. And of course, Bill was one of Randall's Rangers in the marketing side. And I was an engineer by training, so I was on the production side. So we moved in to near each other, and Bill's fantastic wife, Phyllis, became friends with my wife, Kathy, and we developed a very solid personal relationship. When the chance came to form our own investment company, which we called the Venture Capital Company, we did that. And we certainly had the blessing of our spouses. It was about, so Draper and Johnson Investment Company was the name of the first thing we did together. And we made some good deals, actually. And I think that I brought technology, interest in technology to the deal, built up a much broader view of business. And so we had a company with both a technology guy and me and Bill, who was a businessman. So at some point, as Bill said, we formed our own company to make investments involving technology and youth. So Draper and Johnson Investment Company was the beginning of my independent business career. I meant to mention that I think of Mr. Maybach was sitting in the middle. He said a lot about you got a bunch of capital to manage, and you don't just make money for managing the capital. You get such high returns, supposedly, that you make money. Thank you.
First of all, thank you, Paige, for talking to us. There will be 3 companies presenting. They were picked out of several hundred companies, and Paige will decide which one of them will take the award. And the audience, please pay attention because you will help Paige decide. Freebie will... Okay, your time starts now. You have 10 minutes.
My name is Henry. I'm the co-founder and CEO of Freebie.ai. It's really an honor to be here to participate in this Peach Johnson Award. It's our honor. So let's get it started. What is Freebie.ai? Freebie.ai is the world's first creative video agent that make music move and make video sing. So what's the problem we're trying to solve? You know, the creator economy is reaching over $1 trillion market size over the next couple of years. However, the most content creators still edit clips by hand. There are over 200 million content creators globally who spend more than 10 hours per week on the video editing process. Aggregately speaking, that's 10 billion hours wasted every single week on the video editing process. It's crazy, right? And what's more is like most of them think the music is a secret source because they're trying to make audio-video sync content because the music can establish emotions, enhance storytelling, and more importantly, drive attention. In today's era, attention is all we need, right? But the problem is the traditional audio-video sync production has been super slow, expensive. I'll give you a further example. Among the 200 million people here, right, 40% or over 80 million of them are music content creators. And we observe a huge trend at the end of 2024, beginning of 2025, that there are huge demands on Fiverr that music producers and songwriters will go to Fiverr to hire someone professional or even semi-professional, help them make one music video that will cost them more than $500 and wait for a whole week. Again, this is crazily expensive and slow. So what's our solution? Actually, the whole original point, the starting point of Freebie.ai came from the CS 229 machine learning class back in Stanford, advised by Professor Andrew Ng. So me, my co-founder Bruce, were designing this music algorithm to analyze the BPM music instrument. We're trying to figure out, the expression from the music, right, from this mild spectrogram of data. And our vision is always to make music to be seen, not just be heard. Okay? You can think that music is the world's ultimate language and the world's most natural prompt. And you can think of Freebie.ai is a creative engine that understands and processes emotions, rhythms, and movement. Our agentic workflow revolutionized the audio-video sync production by tackling not only the creative process, but the video editing process, where the most time and money are wasted. In such way, we can deliver music video 100 times cheaper, 100 times faster, 20 times more viral with the real 1,000 global YouTuber we collaborate with. So now I'm going to show you a demo from Freebie.ai. This is a funny story because actually we were backed by Stanford Accelerator Start X, and then when I was raising the seed round, we were given 2 minutes pitch. Everybody wants to see the demo, but we don't have time. So what I did was squeeze in the demo. What I did was I transformed this one-pager into a music video generated by Freebie.ai. From the idea, buzzword, lyrics, song, music video, feature myself, everything done by Freebie.ai with a few clicks. Now let me show you this. Hopefully the audio will work. That's me. Could you please show the demo?
We believe music's the language of soul, the rhythm of motion, the ultimate goal. Freebie.ai, where the beat take control. We link sound and motion, make the story unfold. Our agent feels rhythm, connects every frame when it stands your emotion. No two cuts the same from your song to your footage. We align that flame, turn it raw, vibe viral. Remember the name. 100 times cheaper,
100 times cheaper, 100 times faster.
20 times more viral. That's creator master. Proven by 500 YouTubers getting viral faster. Smart beat, sharp edits. Emotions translate from starting to the word. We innovate great. Freebie.ai line that the rhythm create.
Let the rhythm create. Look, I can create a music video for the whole pitch. I don't have to be here today, to be honest. But yeah, what we do is we just turn any song, playlist, track into viral, professionally made, long, short, or short form viral videos in just a few clicks. So I'm gonna skip. This is probably old slides, but I'm gonna just do it really quick. I'll just talk about the numbers. Our product went live in March last year, and our paid customer now are from more than 180 different countries. This truly represents a global opportunity because music and creativity, they're universal. There's no boundary. If you search for AI music video, we're considered ranked top 1 on Google search, but also on ChatGPT, Google's AI Vote, Google's AI overview, because we nail it in the SEO and the GEO after the product growth. And our ARR grew from 0 to 6 million within 12 months or so. We're pretty proud of that, and our growth is still very, very fast right now, with a current LTV over CAC ratio over 25. So, what is our target audience? I'll make it really quick. But the most of our paid customers are still prosumers. Those are nano to small to medium music content creators, songwriters, music producers. But we do have two tails of distribution. One side is more like casual meme user, very consumer. The other side is a very professional, makes very sophisticated music videos. They have over 1 million of followers. So with this, overall, we can have a very high retention rate. Our month 1 retention over 70%, month 2 over 55, month 3 over 45 as a consumer-driven or prosumer-driven product. So yeah, then the next question is, right, so why us, right? Because we have the mode. The real mode is actually being a serial entrepreneurs and then the ability to execute, right? But of course, more than that, we will have this 4 layers of mode that our paid customer already generate more than 1 billion seconds of the beat sync music video. And then we own the taste intelligence, and then we're already number 1. Right? So then from this reinforcement learning, we use the user behavior, we know their appetite and the preference such that we can throw back the model, we will know what kind of video can go even more viral with the data to make this. And then lastly, this year, we're going to introduce a world first beat sync audio video functional model with one of our investors. So, this is us, and now, we raised 3 rounds over $6 million. Now our ARR is at 6 million. I will probably kick off the Series A. And our past strategic investor include Yamaha Music Innovation. So we're ready to serve over 10 million music customers in database. And again, our vision is, lastly, to make the music to be seen, not just to be heard. Look, Spotify is a $100 billion business, right? They create an ecosystem to let people hear identity. What if they can see it too? What if Freebie.ai can create tens of millions of different music versions that customize and sing the best to individual for each song? How big is that? We're not next Spotify, but we will revolutionize how people consume music. So come talk to me. I'm Henry. This is for AI. Thank you so much, everyone.
Beautiful. Thank you. Do we have one question for Henry? Bill, maybe you have a question? No? Rich? No? No questions? One more? No? No questions. All right, thank you.
Right,
Ivan, are you here? Buddy AI, yes. Our second company. Please introduce yourself, and you have 10 minutes.
Hello. Thank you for having me tonight. It's an honor. Yeah, my name is Ivan. I'm a co-founder and CEO of Buddy AI, and this is Buddy. And Buddy is the world's most popular AI for children under 12. He lives in a mobile app, and it was downloaded more than 76 million times already. He is now generating $10 million in ARR and growing fast. So it was initially built for my daughter, Sophia, who really struggled to start speaking English when we moved to the US directly from sunny Siberia. Yeah, for the first 5 months in preschool, it was pretty hard for her. Now Buddy is used by over 3 million children every month and teaches 3 subjects. Primarily, our biggest subject, biggest curriculum is English as a foreign language, and it's primarily in Latin America. About like 69% of our users live in developing countries. And in the US, we teach 2 other courses. One is just general early learning. We help children prepare for school. And the newest one is speech and language therapy, where we work with children with speech impediments and autistic children and help them to develop speech. But we're barely scratching the surface. So we're working on this very highly regulated market of children under 12, where there is 1.7 billion kids, and it's around $40 billion market, and there are no strong players globally. The largest company is probably Age of Learning, but no one with their ABC mouse, but no one knows about them outside of the US. And it's dominated by a very, very old tech. Today, Buddy is already dominating the AI segment of this market, and we will be the go-to destination, like a household name in early learning. Think Duolingo or ChatGPT for kids. So Buddy is this AI super app for kids organized around the talking avatar, Buddy. It has videos, mini games, everything is organized around this very cool, cute chatbot. And we basically were the first company who pioneered AI avatar-based tutoring back in 2019, even before ChatGPT was released.
Hi
there. And that's because Buddy is not the ChatGPT wrapper. It's a highly regulated market where you can't use off-the-shelf AIs. So we had to build our own proprietary AI stack, starting from speech recognition, to make it safe, comply with regulation, and today Buddy understands children much better than Google, Apple, or pretty much anything on the market. And talking about the data, so we actually accumulated probably the largest data set of accented children's speech. Over 50,000 hours of children's speech in our data set today. We are accumulating 4,000 hours, and we're actually doubling the amount of data we're accumulating every month. So in 2024, we raised seed round from Bitcraft and Edge Capital, and we wanted to build 3 features. 2 of them really worked. We tripled our retention, added 30% to our LTV, probably even more. And this feature, one of them was the new AI platform that we launched, and we launched it only in the US. And this is what happened to our revenue. So in the US, our revenue has more than tripled in the last 6 months, reaching 2.8 million in ARR. But the US is only around 11% of our audience today. So it has been our primary driver of our growth globally, and we added 42% in the first quarter in our total revenue, reaching 10 million in ARR. So what we're going to do next, we will release this cool AI feature globally, starting market by market. Today we work in 9 languages. Spanish is the biggest one. And yeah, so it's basically just a matter of time, and we have a 3-step plan of getting from today's 10 million to 50 million in ARR in 2 years. And yeah, we know it will work. We have an awesome team. We started as a speech AI company, and this is actually our second speech AI company in this space. My co-founder and I, we've built a smart speaker before the category existed, before Amazon announced Echo, and we sold our company. Our head of AI is a scholar from University of Southern California, where he spent 17 years researching AI in education. And we also have the super strong game industry team. Our head of product is a former creative director at Zynga. And we have people from Disney, King, and top gaming companies. Yeah, we're already the leading AI for kids globally, with being the most popular app and being like a thought leader on the subject of safe AI. And we are preparing to raise our Series A in May, June, so still figuring out the amount, but now we are closing like a 3 million pre-seed safe just to swing against the recent breakthroughs, mostly with existing investors, but we still have little allocation. Yeah, so that's us, Buddy AI. Join us on the mission, and let's give every child their personal AI tutor.
Thank you, Ivan. Do we have any questions? Do we have any questions? We do?
How do you have all the recordings if you're adhering to COPA?
Under COPA, you can collect data if parents provide consent, and this is what we do.
I see.
But initially, we hacked the system. So basically, we launched initially in countries that don't have COPA, and there's similar regulation. That's where we started collecting data, and that's how we trained our first models. And when they beat Google and everything, we basically COPA certified. And so today we are the only kid-safe COPA certified AI product for children under 12.
Perfect. Thank you. And our third presenter, Carl. Carl is here.
Talk about a lot of important, but no subjects are more important than who you know in the field that can make you succeed. In other words, my biggest deal, which I did, had to do directly with a guy, a friend from Stanford. It didn't have to be Stanford. Could have been anywhere. But I just want to think we have to emphasize not just who you know in that sense, but if you know people who are starting companies, are good at technology, good at finance, we have to put them all together. And I was fortunate enough to have friends and relatives, by the way.
Okay, so that was a comment. Do you want to ask him a question? It's your comment.
My comment is that I was not in the accident that I had the good contact, because I, first of all, developed them in school, and then in graduate school, and then in my work. So if it hadn't been for a certain 2 or 3 people, I wouldn't have had the great deals that I did do. And that was no accident that happened.
Thank you, Pete.
All right. That was fun. Carl, yes, last but not least, our third presenter. Good luck.
Thank you. It's an honor to be here. My name is Carl Dietrich. I'm the founder and CEO of Jump Arrow. Thank you, Sasha. Thank you, Casey, for the opportunity. 20 years ago, I was finishing up my Ph.D. at MIT in the aerospace engineering department. And I got it in my head to do something crazy like found an aviation company. We made something that was called a flying car. It was a personal aircraft that could fold up its wings with the push of a button in 30 seconds, drive down the road legally, and park in your garage. I grew that company over the course of more than a decade and wound up being acquired by the parent company of Volvo, Polestar, Lotus, a number of other global automotive companies. In the wake of the acquisition, I set up a global research and development center for advanced air mobility technology. And we developed concepts for what are now known as eVTOL air taxis, or electric vertical takeoff and landing air taxis. That company has now got one of the leading eVTOLs in China, known as Aerofugia. In 2019, though, I realized that the air taxi was not the best use case for this new aerospace technology. That there was something more impactful with a higher potential rate of return on investment that we could achieve with this technology. And that was the use of the technology to help save lives. And that's what we're doing at Jump Aero. Every year, over 3 million people die simply because they cannot get professional help to the scene fast enough to stabilize them. This is a huge problem everywhere, even here in the United States. At Jump Aero, we're developing an electric vertical takeoff and landing aircraft to get a paramedic to the scene of a rural or hard-to-reach emergency faster than anything else. There are many of these new concepts of aircraft out there right now. The big difference that between ours and everything else out there is we go really, really, really fast. Because speed matters in this mission. Speed matters more than anything else. Speed determines how many people I can cover with one aircraft and how I can distribute the cost of the operation over a large enough area, even at very low rural population densities. One of the other really nice things that we've got going for us is a strong regulatory tailwind. Many of you may know that it takes a lot of time and money to bring a new aircraft to market. One of the big reasons for that is FAA certification. The FAA just published a new rule in the past 6 months that's going to allow us to bring our aircraft to market without the traditional FAA certification that is required for the big air taxis, because we don't carry patients on our aircraft. We just get to the scene and stabilize the patient. When you do that, the operator on board the aircraft is a trained professional, and the FAA allows you to bring a product to market that just gets them to the scene without traditional FAA certification. That reduces the time and money required to bring the product to market by an order of magnitude. So instead of a $2 billion development program, we have a $200 million development program. We have 3 verticals that this type of technology can address. The most attractive and the first one that we're focused on is emergency response in these rural areas. But these aircraft, because they're designed for rapid response, can also be used for courier logistics, like getting spare parts to an offshore oil rig to get it back up and running, and eventually even commuter services, because nothing will go faster than this aircraft. I'm going to dive a little bit deeper on this emergency response use case. Right here, if you were to have an emergency and call 911, it would probably take between 5 and 7 minutes to get help right here. We're in the middle of a city. There are fire stations all over the place. If you live in a rural area, on average, in the United States, it will take you 14.5 minutes to get help. That is truly the difference between life and death if you have a cardiac arrest, stroke, respiratory issue, or just severe trauma, like a car crash. With our vehicle's focus on speed, one aircraft can cover 3,000 square miles. And if you distribute that even over our average rural population density, which is very low, we can bring this product to market at 15% the cost of an ambulance per capita in that coverage area. And for that, they get better response, not the same. life-saving response. We've won $3.6 million in contracts from the US Air Force to help us develop our technology, non-dilutive funding. We've also secured non-refundable purchase deposits from one of the largest first response companies in the world, Falk. They operate here in the States and in 23 other countries around the world. And we have almost $500 million of MOUs with state governments, county governments, and tribal governments around the United States, showing real interest in deploying this life-saving technology as soon as we get it developed. We've also gone out to rural Americans and described the type of life-saving service that our technology could enable. And we asked them what they would pay to have it available where they lived or where they worked. And 33% of rural Americans indicated a willingness to pay $2 a day to have this service available. That's about a $13 billion a year greenfield market opportunity that you cannot do today with a helicopter, because a helicopter takes 3 to 5 minutes to spool up. You can only do it with an all-electric aircraft that you can switch on in a heartbeat. Where are we? So, we're developing this vehicle. We have scaled aircraft that are flying today. We've had our simulator flown by the FAA test pilot who developed the policy on how they certify these aircraft. We've tested our propulsion system beyond its limits, even its failed limits. And we just received this key rulemaking confirming that we are not going to need FAA certification. Our team is made up of experienced professionals. I talked a little bit about my background, but we've got folks that have spent years in sales, in long lead time sales, in public procurement, RFPs. We've got finance and aviation background and composite production background on our key team. We've raised $8.4 million, won $3.6 million in development contracts from the Air Force. We're currently raising $20 million in our first priced round. If this is a mission that means something to you, please come and talk to me. My email is carl@jumpaero.com, Carl with a C. Thank you.
Carl, if you stay here, and Henry and Ivan, will you come back on stage? Henry, Ivan? Okay, good, come back. Do I see Alexander Soroka in the room anywhere? I don't, okay. The reason I'm asking because, what? Where is Alexander? Why did you raise your hand? Huh? Oh, you wanted to ask a question of Carl? Yes. Okay.
Hi, Carl. As a first responder in my former life, I'm worried about the response of the first responder and his ability to fly the plane. Is the vehicle, ET vehicle, flown through AI, or does the first responder need to be trained in flying the vehicle?
So the first responder will need to be a licensed pilot. However, there's a streamlined regulatory pathway to get the type of licensing that you need in order to fly this. You do need training. However, the aircraft has what we call simplified flight controls, meaning it's basically the computer flying the aircraft with all of the envelope protections. So no matter what you do on the sticks, you're not going to drive the aircraft into an out-of-control state. It protects itself, right? But you guide it. And you make the final determination, is it actually safe to land in this person's backyard or in this parking lot or on this rural dirt road? You make the call on that. So it's not fully autonomous, it's computer augmented safety.
Hello, Carl. Great presentation and a needed solution. I work on rural area problems. How much does this vehicle going to cost?
The anticipated purchase price of the Pulse is $1.8 million. Now, a typical ambulance comes in at around $300,000 to $500,000. Because we cover so many more people in these rural areas, that's why the per capita cost is actually about 15% of adding an ambulance to your fleet, and you improve the outcomes. So, does that answer?
All right, thank you. So what we're going to do now, so that we help each make the decision, I would want you to applaud to each presenter, and by the sound of those applauds, we will know which company you like the best. Right? So if you do a little bit, a lot, or thundering applause, and then Pitch will decide which company he'll pick. All right, we started with Henry. How did Henry do? How did Ivan do? How did Carl do? Okay, so Pitch, what do you think? Which one of these three presenters should take the prize? Just get a mic.
They're all attractive for doing what they do. One guy is a very large-scale entrepreneur. The other two are people who back specific ideas in the marketplace. So I don't have a preference.
Well, we have only one prize. We will need to decide. Do you want to take a 5-minute break and talk to Bill, maybe? All right, while they're deciding, I'll tell you another drama of yesterday. So we created this beautiful P. Johnson Award, which was supposed to arrive last week. And Amazon kept telling us that it's on its way. And today they texted me saying that they lost it, but they will be happy. They will be happy to present it next week. So what we did, we took a picture of that award. I understand, it's like telling a child, here's a cookie, oops, it's a picture of a cookie. But it's better than, I'll show you how it looks. All right, in the meantime, there are hard negotiations over there. All right, so, as I said, we took a picture. Oh, Pitch is ready? Okay. So the award does exist. It will arrive next week and will be another reason to see the finalists. See, it's beautiful. But I'm going to write to Mr. Bezos himself. I will send him a picture of this and say that they owe us something. This is just a placeholder so that we can actually hand it to people. It's nice, right? It's like a globe. It matches the box. We've been doing this event for 23 years. You know, things happen. But the way I panicked today, I didn't panic in all those 20 years when I realized the award didn't come. But anyway, that's the best we could do. Do we have a winner? All right, let's try again with applause. Maybe you guys change your minds. All right, how about Henry? Let's applaud. How about Ivan? And how about Carl?
Jump arrow.
Jump arrow.
Paige also believes in Carl.
Good job, Paige.
I present you this award, which says Pete Johnson Award. It's beautiful. I will hand deliver it to you next week. Now, do you want this thing?
Thank you.
Okay, and because it was such an emotional session, I need a 15-minute break. So you guys have a 15-minute break, and our next panel starts at 4.
I'm Stephen Colby. I'm a partner at Rimon Law. By training, I am a patent attorney, so I'm really deep into tech. I have degrees and technology stuff all in my background. But I'm also an investor, and I'm Sasha's partner at Double Star Venture Partners. And so therefore, I get the honor of doing one of these panels. Thank you. I'm going to start off by giving a short introduction to each of the panelists, and then I'm going to ask them to talk a little bit about themselves so they can, because we actually just met like 15 minutes ago for most of them. So I'm going to get them to talk a little bit about themselves, and then of course I'm going to have a series of questions for them. So starting off here is David Perry. I'd ask you to stand up, but the ceilings, might be a little low for you. Yeah. Okay. David is a serial entrepreneur. He has worked his way up to bigger and better companies. I learned last night that he actually got an award from NEA, right? And that was the Liquidity Award for having made them so much money so quickly. And they were very happy. And apparently he never needs to show a pitch deck again. Is that what I've heard? Yeah. That's the theory. Okay. And the next panelist is Val Mukherjee. I think I got that right. And he is the managing partner and founder of the Cyber Future Foundation. All right. And he also was recently won, I don't know if it was recently, as an award winner, the General Harry Rutledge Award. Is that right? Pretty close. Pretty close. Okay. So I'm going to let them talk about themselves in just a minute. All right. And then we have Dylan Mullins, who is actually the real military side of the investment here. And he is at Franklin Templeton. He is a research fellow, and he's a member of the Silicon Valley Defense Group, right? So he's going to be on this panel. He's going to represent more of the military than, say, David, all right? And finally, we have Natalie Torin. And she is a family office founder and advisor, so she is really the useful person here, right? Who's going to give people all kinds of good advice. She is going to talk a little bit about more from things from the family office point of view. And their office invests in real estate, biotech, alternative energy, a wide range of things, including fine wine. So afterwards, if you want to know about wine, Natalie's the one to talk to. All right? So that was the brief introduction. Now, I'd like each of you to give just a little bit about yourself. And
Okay. My name's David Perry. I originally come from the video game business. I grew up in Northern Ireland. There wasn't really a video game business there, so I moved to England where there was. And I realized the power of branding. So I managed to get the rights to the Teenage Mutant Ninja Turtles. So suddenly, to have a brand like that, your game goes straight to #1. And I'm like, wait, that was easy. What other brands are out there? So I ended up doing the Terminator for James Cameron, Aladdin for Disney, The Matrix for Warner Brothers. And as these different properties have, stair-stepped my career, I then realized that entrepreneurship's a little more interesting, which is how can I make companies? And so I made a company that it made video games so you don't need to buy consoles anymore. You could just play them through the internet. And we ended up, thanks to Steve, getting some pretty great patents. And Sony PlayStation bought the company and built it into the PlayStation. So I got a very cool business card for a while working for Sony PlayStation. A previous company, the one when we did The Matrix, was bought by Atari, so I had an Atari business card, which was very cool. And today, because I come from an engineering background, I can't resist AI. It's just impossible to resist it. So I've been experimenting in every possible facet of AI. I thought it was really interesting. One of the earlier speakers said that we don't invest in AI, we invest in data. I think that's actually really insightful, because what are you going to do with the data is really, really important. So I'm putting a lot of energy right now into a new company that helps non-creative people be creative with the help of AI. And the ability to sort of unlock everybody's creativity is a very interesting place that I think AI can help with. And we're using data to do that. So that's what I'm up to.
Val?
Great, that's a great story. So to follow it up, I think, securing what David builds is something that has been my passion for the last 2 decades. I've been
in security for last 25 years almost, from cybersecurity to infrastructure security, and now national security for the last, almost a decade now. Spend my time across many passion projects, profession. The cybersecurity profession is a passion for me personally, and that's what I've spent time on. It started off with having tech transfer from the Israeli cybersecurity tech transfer to the US, and you can see now it's almost $1 trillion industry that has grown over the last 10, 15 years and matured. And that is something that I think I take very seriously. So I have a nonprofit that we started as what was called Val's Pals, is now Cyber Future Foundation. I co-chair that with General Petraeus. Both of us are very passionate about the future and securing the future. And with his experience in the battlefield and our experience on the cyber battlefield, we have been able to get a lot of people motivated to join our journey. Of recently, our latest venture is U2D2, and U2D2 is focused on this. As we have done the cyber tech transfer, this is focused on the drone tech transfer. As you can imagine, the current battlefield, the Russia-Ukrainian battlefield is probably the most active battlefield in terms of what are the wars of the future going to look like. We're just seeing the two different theaters now. One, the Ukrainian theater, and on the other hand, the Middle East theater. They're so drastically different, but they could be, so transformative in terms of how we secure, defend infrastructure, and that's what we are working on right now. Making sure that we're able to defend the sanctuaries that we believe in and operate in. The society is going through so much change, especially with AI. So I wear a technology hat, a defense hat, and also a policy think tank hat. Dylan?
Hi, everyone. My name is Dylan. I'm with Franklin Templeton. Specifically, I'm a research analyst for Franklin Venture Partners on our defense and aerospace strategy. Franklin Venture Partners is the private investing platform for Franklin Templeton's U.S. equities business. So we typically invest in later stage defense and aerospace companies. To date, we've deployed around $3 billion in capital in defense and aerospace as a sector. It's one of our flagship strategies on the venture team. I'm also a research fellow for the Silicon Valley Defense Group, or SVDG. It's a Washington, D.C. based nonprofit policy think tank group focused on connecting policymakers directly with startups interested in engaging on national security issues. Every year we publish a list called the NatSec 100, which is basically a temperature check of the defense innovation ecosystem, which has obviously gotten a lot of attention and hype in the last few years on the back of current events that were just mentioned, and just general investor interest in this segment. So super excited to be here.
All right, Natalie.
Hi, I'm Natalie Torren. I am originally from London, and I've spent my career in the UK, US, and Hong Kong. I've previously ran a family office network. We did events in Europe, Asia, and the Middle East. And I've spent my career tracking how family offices get involved in alternative investment opportunities in traditional industries. There are a lot of parallels between how a family office works and how the defense industry works. So this should be an interesting discussion. Thank you.
All right, so the idea of this panel was to talk about investment in areas where there's dual technology use. So, and I think we have a lot of different perspectives here, starting with Natalie from the family office point of view. How do you approach differently than you would normally a company or technology that has dual use purposes? Do you weight it differently? Do you worry about the company trying to do too many things at once, or trying to satisfy the government and consumers, for example? Tell us how you approach dual use companies or technologies when you're doing investment. How is it different?
One of the biggest challenges with dual use is it was often the benchmark for whether these companies were investable previously. Now I think it's more of a nice to have, because your single customer risk is greatly de-risked when that customer is the DoD. Yeah. And I think the government and the family office work very similarly in the fact that they're based on trust, not transparency. It's
kind of like a Ghostbusters model. It's who you're going to call, not who you're going to Google. Sorry, I just made that up. But it's very much geared towards investing in a company that you trust and you can adapt over the long term for multiple uses rather than looking at a public-facing company versus a private-facing company. Right. Dylan, so you're primarily focused on defense. What do you think when you see a company that also says, oh, and we've got this huge consumer market?
I think we approach it with a large degree of skepticism. Not completely closed-minded, but I think one of the trends we've seen is dual use as a term or as a theme has been probably overused in the last few years in the category. I think it's a great point on sort of the single customer risk around DoD. Folks are getting more comfortable with it because they recognize that DoD is not a single customer. It's not a monolith. The buying patterns are very different depending on who you're selling to, what you're selling. So I would say there's very, very few companies in our portfolio and also more broadly that are truly dual use. And I don't mean that as a pure negative. I think that's perfectly fine. The original conceit around dual use on DoD TAM being limited, which I do think it is a limited TAM, is perfectly fine as long as we keep the valuations in check going forward. And I guess the only concern is on dual use being an excuse to say, hey, look, in the future we have this whole secondary market in the commercial segment that probably doesn't exist and won't pan out.
Well, I think I'll just build upon what Dylan said about dual use. I think this, especially being in the Valley, at the heart of innovation, and the fuel that's going into innovation, on the investment. I think dual use has been overused over the last several years with no one wanting to put defense on the pitch deck, and that was a liability. And I don't think that's right anymore. There is so much innovation that is required. I think we are undersubscribed in terms of what we could and should do in defense. And that will be, I believe, at least in our purview, would be the primary source and the fuel to take innovation forward. Most of the technologies that are currently we use are coming from the defense innovation. I mean, including the internet itself and the computer, right? So we believe that there will be an accelerated, acceleration in the market driven by drones, driven by the application of drones in different areas, and actually that will help the commercial and the civilian market much more than we anticipate or we have done in the last 10 years.
David?
I'd say for me, more from the entrepreneur side, I think dual use is quite dangerous because it can split your attention. The trick is to find out where the money is, right? The way I explain to people what I think investors do is investors want you, the entrepreneur, to go drill holes and find gold, right? And some holes have a little tiny bit of gold, and some have a lot of gold. And they don't. I remember Benchmark Capital once saying to me, like, we don't like to pay for education, so we don't want to give you the money to go find the holes. That's not what they want to do. They want you to go find the holes. Which one is the richest hole for this company? And then the VC's job is to bring in the heavy equipment to get that gold out of the ground as fast as possible, all right? To get all the gold out before other VCs even know that seam existed. So usually you find when entrepreneurs start talking about, but we also have this market and that market, and we can do this and we can do this other market, it just turns into a bit of a mess. It's like, which is the hole that is richest, and how do we mine that hole and get the most out of it using the funds available? That usually works best.
Okay, so right now we're riding two waves, and from my point of view, many years ago I used to surf, and every once in a while you get a situation where you have two waves pile up on each other, and when it comes crashing down, it's a lot different than what you were expecting. Right now we have two active wars, and also we have AI. So my next question is going to be, how do you see, and feel free as a panelist to talk about the impact of the wars on this sector, but also the impact of AI and how that's working together. Anybody? I'll just go back to Natalia. Yeah.
Are you going to say something?
Yeah, David.
I can jump in. I got invited to go shooting with the CEO of Endural. Endural is probably the most high-tech company right now in weapons and warfare. And seeing the technology that they're actually building is just a quick backstory. I don't know if you've ever played paintball or anything like that, any of those games, but if you go out in a forest with a paintball gun, you would be stunned how quickly you get shot by someone you didn't even see. It changes your whole perspective on, man, I wouldn't want to be in a forest with real people with real guns, because I just got shot 6 different ways in the last 5 minutes, right? So that's the real world. And then you see what Endural's working on. They actually have drones hovering over the battlefield. They're actually scanning everything that's going on, and they're feeding that into your visor, so you can see through buildings. You can even hear through buildings. You can see people walking around. The idea that you can do impossible things with technology, what everyone else is seeing, you're now able to see in the battlefield. Can you imagine trying to fight a battle in that environment? At some point, the AI is going to become so dominant and so deadly, I don't even know if humans have any value in a battlefield in the future. And this is something the game industry has been experimenting with for years, is it's going to be robots fighting battles versus soldiers, and I really do think that's where we're heading at the speed the AI is getting there. I'll tell you what, I wouldn't want to be out there.
I shouldn't be. I mean, all these videos that you see out there is very real. Yeah. No, I mean, before I say anything, I should probably just mention that, you know, there is only one time I jumped into the ocean to surf, and I got hit on the longboard on my forehead, and never going to, you know, go into the middle of those 2 waves. But in fact, you know, one of the waves that we wanted to catch and focus, as you know, David mentioned about the finding the gold and then getting, you know, finding which has the richest gold, right? So right now, if you think about you're in defense tech, the battlefield and the frontier is Ukraine. I mean, the battles of the future are being fought now, and you know, most of the DOW equipment, and with all the respect that we have for Endural and the innovation that has happened, you know, with Shield, Endural, and other partners that we work with, I believe, you know, this is the time when we have a lot of Lexus and we need Toyotas. We need to commoditize that so that we can actually make this really accessible to our warfighters. And that is the current need. You know, we were just 2 weeks back, actually last week, and General Kane was with us to celebrate the America's 250th anniversary in Texas. And, you know, that was just a week after we spent a very, very anxious Easter Sunday. And those 2 boys should not have been in enemy territory, right? Those should have been drones, and not the you know, the Eagle 15. So there is a huge learning that is in a compressed time frame that you know, the Ukrainian laboratory has produced, and that's, I believe, you know, and as unfortunate as it is, as unfortunate as the length of the war has been, I think it is our you know, it would be a shame if we don't learn from it quickly and pivot into this new opportunities of war fighting, where you're not going to put a human in the harm's way, and you can put robots and let them fight it out, right?
Yeah, I think there's, the clear lessons have really been around investing in the industrial base, the next generation industrial base, so the machines that build the machine. I think maybe there's a little bit of over-indexing right now on specific technologies that may or may not be applicable for, you know, future potential conflicts. But the clear sign from both Ukraine and what's happening in the Middle East right now is that we have really underinvested in the defense industrial base in this country, and our allies too. And I think that's been a huge wake-up call to rebuild, and not rebuild in the same way that we did this last time, but rebuild with next-generation technology, with more automation, integrating all of the learnings that we have from these conflicts into the way that we prepare to fight the next one. I want to be very, very careful on learning too much from specific technologies that maybe make for good news headlines, but bad investments.
I think one of the big challenges is we're dealing with 2 sets of machines, 2 sets of customers. And one of them is the actual war machines. They're high volume, they're built for planned obsolescence. They need continuously replacing. And it's really a case of shields and swords. There's one set of investment going into the actual technology fighting these wars. There's another set of technology in cybersecurity, which I know Val can talk about a lot, in terms of the long-term strategy to prevent these from happening again. It's my hope in the long term that peace is going to be more profitable than conflict. But it's a totally different investor going into the two. One is dealing with a short-term immediate need, and probably the first to use a technology which will be the highest risk for their own investment, but also it will mean deals that aren't shopped around a lot. The other has the advantage of long-term knowledge of finding the best cybersecurity protocols for making sure that this hopefully doesn't happen again.
So,
yeah, Wexy, just one other comment on that. The cybersecurity that we were, the speaker earlier today was talking about is they didn't really get into the subject of AI coding in real time, which is basically AI infiltrates, finds what's available. There's some old device in the wall, some router or something with some old chip in it. It immediately goes after that and can code for that chip, because that's something that, there's no programmers left that even know how to program that, but AI does. And so AI codes for it, replaces the firmware, and is now inside the building. You can reboot everything, you can turn everything off and on, doesn't matter, it's still there from that point forward. So cybersecurity, it's cyber warfare is going to be so devastating when it's done well. It's going to absolutely cripple countries, and so and it's going to crash financial systems. It's going to cause chaos if they. And I just don't want to deliver on on that one key point, which is that cybersecurity and cyber war are going to become such an important piece of the future of warfare. It's something I don't think governments really fully understand technically what can be accomplished with code that knows that can actually generate code on the fly as it attacks.
So, yeah. So Dylan, now I have a question just for you. And I'm going to hit you with this one because you're the research analyst who's supposed to predict. So you're going to get what are the risks and expectations 3 to 5 years from now?
Yeah, I mean, I think there's an even shorter term risk right now, which is around budgeting. A lot was made of the president's 1.45 trillion top line, of which 350 billion is coming from reconciliation. I would, my own probability weighted analysis of that probably doesn't include any of reconciliation, and probably doesn't even, maybe roughly $1 trillion, probably a little bit less. But it's a midterm year. So
what's $1 trillion?
Yeah. What's $1 trillion of U.S. spending? Most of that, by the way, won't go into the startups that we're investing in. Most of it will go into operations and sustainment and paying folks. So yeah, I mean, look, a continuing resolution is a short-term risk here, just because there are so many of these programs that are new starts that simply won't happen if Congress can't get their act together. So I think, it's a short-term risk because it's going to be decided in the next, 6 to 8 months. But there's long-term implications, right? Because if these New START programs don't happen, if a 7-year procurement cycle for munitions don't happen, then we're going to be paying for that down the road for the years to come.
So maybe I can just add to that. I think there is a huge pivot happening as we speak. I don't know how many of you are following the drone dominance gauntlet, phase by phase. We have been participating in that with the Ukrainian tech for the last 3 months at least now, or maybe 4. And it was a very accelerated program. What we learned from that is change can actually happen, and it's actually private sector which is making that change happen. Because for as much as the innovation is funded by VCs, it's also what actually works for the warfighter, especially in the defense. That's what we're looking for: the kinetic effects, the munitions, the swarms. The FPVs versus the big drones, our Andy-Rules versus F drones, which is one of the winners of that, the drone dominance gauntlet. Things are changing very fast, and that's the opportunity that we have. I mean, I was telling, don't get caught between 2 waves, but I believe one is the wave, the other is the tide. So AI is actually a tide for that big wave, and we got to ride that wave to make the difference that we can make in the market.
So I now have a question that's for Val and Natalie, and that's, have the wars changed your investment profile, or what you're at least accepting as pitches from your investment outlook?
So I can't comment on what a family office does and doesn't invest in.
Okay.
I can only talk about trends.
Yeah.
But there's a short-term advantage of family offices. Everyone knows they can move cash faster, they're more liquid, and so there are a lot of new companies being assessed in real time right now. 50% of Fortune 500 companies were created in a downturn, as far as someone told me. Yeah. The advantage for family offices, they're going to be able to get in earlier. They're probably going to get in at a bridge round at a discount to the price rather than an institution. And they're also going to be much more patient with their capital. So they'll be able to invest long term as well. Comment on that?
Well, I think that's good news because our job as advisors and also establishing funds is making sure that we give those opportunities to the family offices. And I think the way we are curating those opportunities is creating the beachhead, and the creation of the beachhead is by choosing the winners, the top winners who are already producing great tech. They're just not good business. They don't know how to run a business. They're great innovators, and we turn those innovation into a economic engine of a business. That is what we are paid to do. And I think that is what we are paid, that is what the outcome should be. That's what we're doing in practice for the last several months based on the learning of, going to Kyiv, looking at the Brave One ecosystem, which is the Ukrainian drone ecosystem or the defense innovation ecosystem, and then choosing the best. There are companies in this space who are already making $100 million, but they have one single customer. They have series of products, but they don't have, and now getting that access, getting them the market access, establishing them as American companies and being able to, really get them participate in the overall defense ecosystem. I think that's the new defense industrial base that we need to build.
So the next question is open, and David might start because I bet he'll intro it, and you guys can comment. What is your biggest worries right now in terms of the investment cycle or the technology?
I think the biggest worry right now is probably the rate of change is so rapid, it's making people it's making their heads spin a little, and it makes them pause because they don't know what to do, because it's just, everyone was telling kids you should be coding, you should be learning to code. That's the smart advice, and suddenly that's not smart advice.
Wait, you did that, right?
What, coding? Yeah, of course. I still think coding's got value because when you're actually watching AI code, it always chooses the most difficult path. It does it the hard way, and you're kind of like, why are you doing it that way? Yeah. But overall, I just think the way the world is going right now, it's moving so quickly that we just have to let everyone take a breath so that VCs can sort of lock back in on what matters. That's why saying again, data matters. Data really does matter. That pitch for the technology that makes a video based on music, that's a cool idea. But what's the data play, right? The data play is we could make lots of videos, work out which one is a hit. So we're going to make 10 of that video. We're going to test it in social media. We'll get everyone to connect their accounts so we can monitor their social media to see how well their videos are doing. Now you get a data company, right? Yeah. Now you've got all their social media data. You've got the how well videos perform. What's the DNA of a really successful music video? That's a data company. I think that's actually more valuable than just saying we do AI.
Well, I think, being in the space of cyber for the last 2.5 decades, Snehal was a partner of mine. We used to work together for so long, and now at Horizon, before that Splunk, other places at DOW previously. I think we are used to the comfort of the previous decade's space. Speed is extremely important because that's the speed. It is, you can see visibly how AI is moving, how fast it is moving. I think we cannot be comfortable. We need to be uncomfortable. We need to wake up. I don't know how much coffee is there in this, left in this, and how evening decaf would work, but I can guarantee you, by the time we are making an investment decision here, there has been some tectonic shift already happening in a particular layer within the defense tech. It's not just AI. The application of AI into defense is what actually is accelerating this thing. And I think we cannot sit here and just ponder. We have to act. This is the moment it matters. And combining AI and defense tech, I think that there couldn't be any better combination because both need security, and both relate to security. Especially in my career, having been in the cyber business for about, I think you have to to find the signals from the noise. There is a lot of noise in the market, especially AI-generated noise. I think 70–80% of the content that floats around in the internet is actually synthetic content. People don't really create things anymore. They just use tools for the creation, and they curate more than they create. And I believe if we sit there and ponder, and if we don't have this, this is a fantastic forum, and thanks Sasha for actually putting this together. Just honoring Pete Johnson here. It was just fantastic to see the inspiration of what they have made and what we are now responsible for making. We cannot shirk from this responsibility. This is a huge moment of responsibility for us.
I alluded to it before, but the thing that keeps me up at night is valuations. And I think that's going to need a little bit of a reset, and it's going to be an uncomfortable conversation for a lot of folks. But that's the number one thing that is, I think, troubling us at the moment.
I think one of the challenges is being able to see an investment, see an objective through to the end without counterparty risk. And the technology is changing so quickly, especially in this sector, that it's very hard to keep up with. The business models are not. In fact, they're probably becoming more old-fashioned and more consolidated. There's more M&A going on. I have a background in healthcare. In pharma, there are a lot of patents expiring, so that means there's a lot of M&A. These are trends we've seen before. So one thing that we've seen happening a lot is things are coming onshore in the US to develop full ecosystems. We're seeing a lot of onshoring of critical minerals. That's been a hot topic. There are a lot of companies coming to the US in known business models which are more sophisticated than before, such as SPACs, especially in this industry. During COVID, and sorry, this is a tangent, Mark Andreessen wrote this manifesto called Time to Build. And he said, how is it that California is one of the biggest ecosystems, economies in the world, but we can't finance and fix a supply chain with this kind of problem without dealing with outside parties? How is it that we're not prepared for this with all the technology available in California? So I think right now we're seeing how we can address problems end to end in the US by bringing a lot of technologies onshore. And hopefully that will be one of the good outcomes of this, if any.
If I may add on that, because the critical word there was phrased was supply chain, and I think we are at the cusp of that. Whether it's AI or it's defense tech, we don't have the ability to make the end-to-end supply chain work. And even it's drones, right? We have the brushless motors. The motors, 99% of them are coming from China, and there is a geopolitical choke point that actually not only could cut down on the motor production, whether it's civilian or defense, doesn't really matter. And on the AI side, you have all the rare earth metals, and I think those rare rare earths, and they really make a difference. And in this kind of geopolitical world where it is so much divided, one supply chain restriction could be like the Strait of Hormuz right now.
I think we're getting a great example of that.
I hope we get more. We're talking about drones. Drones finding rare earth minerals, that's valuable.
There you go.
All right, let's put it to work.
Great. So has the current changes in the last few years, has it expanded or contracted your geographic investment profile? In other words, is there now more a tendency to invest outside the U.S. than there was 6 years ago?
For me, it's all about talent. So where's the talent in the world? And coming from Europe, it makes me think more globally, I guess. But and in the video game world, I was one of the first to go to China to talk to Chinese game companies and Korea. So to some extent, there's a trick which you can use is there's when people are coding, they're usually registering the code somewhere like on GitHub. You can look in the code to see who's been doing the most contributions to that code. So there's some piece of code that's really impressing you. You can look and see, well, who did this? Oh, it's a guy in Adelaide, South Australia. I don't care that he's in Adelaide, South Australia. That's the guy we need on our team, right? And so this global thing, we have to embrace it. It's because the talent that you need, who are the Jedis at the things that are going to really move your needle, you can't be, oh, sorry, they have to be within near my office so they can come to the office every day. That doesn't matter anymore. It's just who's the best and how do we get our hands on them.
Well,
see, I can, I mean, last 2 decades I have worked all on global teams. I mean, my teams were in 50, 60 different countries, and I used to head, I used to chair the energy business and then critical infrastructure business for Ernst & Young. And I had 7,000 team members in my team, and they were probably from at least 40 to 50 countries. But I think, in the current circumstances, I'll tell you, last 4 months, I've been in 4 different forums, so to speak, at Davos, where I host a program there, Cyber Future Dialogue. And then in Munich Security Conference, then Prime Minister Modi invited us to go join the, Raisina Dialogue, and then we hosted the US, Cyber Future Summit in Texas last week. I have seen different narratives play out just because of the world as it is today. And across these 4 theaters, I think we are a little bit of siloed in terms of how we have seen the world in the last 15 years or 20 years and how we are seeing this today. The world has changed so much, and the global south, another concept, right? So there is an incredible access to talent, but if I have to put it to, critical utilities such as AI or critical, sectors such as defense, I think we have to find a middle ground how we do make it happen. It's actually a very interesting, challenging time at this time to find the best and apply it to the areas which actually be sustainable. And there is with this geopolitical situation, I can guarantee you there are places that you don't want certain teams or individuals for good reasons, right? And those restrictions, especially in defense, apply more than any other field. And I think it should also probably apply to AI, but we can't do that. It's a very tech-enabled and global talent pool, which has to be managed in certain ways, specifically for the reason that David told about cybersecurity in AI.
Yeah.
Our A&D portfolio as it stands today is 100% invested in the US. That's not by mandate or anything. That's just where we found the investment opportunities up until this point. The first vintage of this strategy started in 2015, so there wasn't a lot internationally that was even investable. There wasn't a lot in the US that was investable back then either. We are starting to look more and more internationally now, I will say. We haven't found anything yet that we were willing to be deploying capital to yet. I will say, though, Australia and Japan are 2 areas of high interest for us where we'll be spending some more time over the next few months.
I would say, likening this to healthcare again, people are going to go where the market is more than ever before and not just look for investment at home. So, if you're targeting a disease in healthcare, which is very prevalent in one country, you should be looking for investment there. I think defense is going to work the same way. We're going to be building a lot of long-term relationships for short-term conflicts. The keynote earlier referenced reference partners, commercial channels, channel partners. And one thing that's really important in defense is that the government doesn't work the same way as the private sector. There isn't a single customer that you sell your product to who will then tell all of its competitors to buy your product as well. But that's exactly how the government works. And I think more than ever before, we'll see governments find a way to use the same product for aligned uses in the long term to create their defense strategy through that. So there'll be more consolidation. It will be harder to get through, but that will mean that only the best companies are being formed right now and invested in.
Well, if I may add to that, I think, and this is probably more for the investors, how the market is operating right now, especially with the current, geopolitical environment. The government is not one buyer anymore. Within the defense, Department of War itself, there are multiple buyers, and I cannot tell you how much We try to keep up with the number of buyers that are there for different agencies and services. But also, you expand that lens to the global buyers in the defense sector. Every country in Europe is now buying. I mean, they are forming little blocks themselves to buy. And one of our partners, the 3Cs Business Council, is comprised of 13 countries, which are a subset of the NATO countries, but they are buying directly. And Poland is the lead of that country, of that block. So I think the market is shifting very, very actively, especially in the defense side. Even in the AI side, the sovereign AI market, right? Every country is trying to build their own AI. We just had one of our friends build the sovereign AI for Denmark, and now she's moving to build the sovereign AI for Poland. So I think the markets are shifting. That's an understatement, but also the investor awareness of that market shifting is going to be our job to.
One other really quick comment is I think it's surprising. A lot of entrepreneurs and startups don't realize that countries want you to do business with them really badly. And they have an entire department or organization in certain cases who will fly you to the country and introduce you to all the CEOs you need to meet. They really want business. And I come from the UK as well. I don't know if you've been to, the UK does the same thing to me, meaning like you get invited to all these events that will help get more business. I've been flown to Ireland to meet with Irish entrepreneurs who are building their companies because, again, they're just trying to get that bridge going as much as they possibly can. So the unlock is already established, just a lot of people aren't really taking advantage of it, and there would be a lot more cross-country commerce if they would use those facilities.
One of the conferences I go to each year is USA Select, which is the US version of come to this conference and we'll give you a tax write-off in Tennessee, or every state, every single US state and tribe or whatever is trying to attract business from all over the world. And it's a pretty interesting, it's a lot of fun conference. My next question, Val, you had something more you want to add?
I just want to add that, there is also a regional microeconomy across all the states. So right now, I cannot tell you how many states have pitched us to land the first Ukrainian company in the US. I mean, we are getting interest from Texas, the Towle area, of course, led by Texas. Then you have Northeast Ohio. I mean, the Congressman Capter, who's, the chairwoman of the Ukrainian caucus, she's pitching. Florida is pitching, and Alabama is pitching. So, I mean, there are actually all these microeconomies in each of these states that I think are another investor signals that we should be, noticing.
Yeah, I see that a lot. What I was going to ask about what your ideal investment would be right now, but I'm going to change that a little bit. I'm going to say, what features are you really interested in finding in companies, keeping in mind the two wars that are going on and the wave of AI and military tech that we're seeing right now? Natalie, let's start.
I'd be more interested in technology that can thrive in spite of the wars rather than because of them.
Yeah. Okay, that's great. So can you give me an example?
I mean, the traditional industries that were there before that will be there again.
Yeah. So an example would be emergency healthcare.
Emergency healthcare, real estate development. There will be a lot of winners in the contracts, as we know, to rebuild after these wars.
Yes.
Yeah. The industries won't change.
Yeah. All right.
Space tech, I still think there's a lot of value to be generated in the space economy. So space company, government focused with a DoD program of record, a line of sight on one that is not Golden Dome related. That would be the ideal profile at the moment.
And most of the drones fly, but also they're on the ground and on the air. But I would think that the communication and the energy, these are the two things. Like connecting two things, whether it's AI or anything, I think energy is the key. And communication is the key for connecting that. I think those two, whether in war and peace, it's going to be incredibly essential for us, whether, in our daily lives, the last presentation on the pitch presentation that Carl kind of congratulations to Carl, by the way, of that last mile, the emergency first responder, right? It is communication plus energy, whether it's battery, stored energy, or it's energy that's getting fed into the battery. Those two, I think those two are going to be very, very crucial going forward.
So I've made lots of investments, and I'm a much better entrepreneur than I am an investor, let's put it that way. I've made some terrible choices. And the reason I make such terrible choices is because I always get excited about the idea, like this is such a great idea, but I never check, have they achieved product market fit? Does anyone, is it really working or is it really real? And so I keep making that mistake. I'm cured now, and now I lock into only companies that have already proved that it's working, and it's a much better investment strategy, and it's working much better. So, but that's really what I focus on these days is have they achieved their product market fit yet?
Okay. Let me just check your watch because I don't know what. Okay, we have 10 minutes. Is there anybody in the audience have questions for these panelists?
Any question? What's the biggest bridge in the world? Any question?
We got one over. Yes. Go ahead, Ilya. So you can come here now. I'll get up.
There you go. Meet in the middle.
My question is probably for Dylan and David primarily. Last year, like in October, Dan Driscoll, who is a lifelong venture capitalist from the West Coast and currently Secretary of Army, was saying that the new Silicon Valley is Ukraine. And we kind of overslept what's going on in the defense tech, and that we need to pick up. This year, the budget allocation in the Department of War for all this type of new defense tech is $1.2 billion. Next year is 75, and that's the scale. And here in the West Coast last year, everybody was shy and talking like dual use, no defense. But the success of Silicon Valley was driven by the defense tech, semiconductors, and computers themselves, and the internet. It's all coming from defense. Palantir recently published this manifesto that Silicon Valley needs to repay its debt to defense tech. Do you think there would be a new hype here or not?
Yeah, I mean, look, the reason why we have Silicon Valley the way we do is in large part to DoD. I think a trend that has emerged over the last few years is, hey, all of this amazing new and advanced technologies that we take for granted now, like GPS, we have thanks to DoD. But in recent years, the commercial market, right, the strength of the US economy has meant that a lot of technological innovation has actually happened with eyes towards commercial and not DoD. So there was this perception that it's time for some more integration of that commercial tech back into DoD. I think the narrative is a little bit of an oversimplification of what's actually happening now. And you point to something like the replicator initiative that happened, that DoD tried to push in the last few years, which I would call an abject failure on most accounts. That was supposed to be the shining example of taking commercial tech and trying to scale it up. So yeah, if we're going to throw $75 billion at a rebranded version of that, I'm going to have a lot of questions. I don't think it'll actually be that much, but we need to think a little bit more nuanced about what it really means to apply commercial tech. It's not going to be the same type of technology that you and I are going to have access to in a commercial market in one way or the other. The drones that are delivering your DoorDash are not going to be the drones that we're using in the Indo-Pacific. I think once we get a little bit more sober to that, a little bit sober to what the actual funding will be, which I think it'll be closer to $10 billion for that particular initiative, then I think there might be some more clarity on what the actual acquisition pathways and what they need to be.
Anybody else? That was, so I think we just have a couple of minutes left, so
yeah.
Maybe everybody get a little chance for your final...
For final thoughts on things?
Yeah, final thoughts.
Let's think. So for me, my main focus now is trying to move things as quickly as possible because of the speed that everything's going. And just to cover the defense one, really quick. I'll cover it just to touch on it. So we created a technology that allowed you to stream video games from the cloud to a console or to a television or a laptop or a really old laptop that could never run this video game in a million years. And so this was quite magical because you could then have incredible experiences on very weak devices, but it was simply through streaming through the cloud. Suddenly my office was filled with military people in full fatigues wanting to see our technology. And the reason they wanted to see the technology is because the laptops the military use are terrible. They're just so old. And the problem is that they're not allowed to install software on their computers because they can be, cyber problems. So it takes years to get permission to install something on a military laptop, on this old clunky military laptop. And it just made me realize, man, we need to speed up. Like this, you can't be living that way in this modern, super fast society. But the idea was that we could then stream the experiences onto these laptops so they could try software immediately because that software is not actually running on the device. So there's no risk of infecting the device or taking control of it or anything like that. But basically, I'm a big fan of let's just speed up. That needs to happen. We need to embrace this technology. It's going 1 million miles a minute, and we got to hop on board. We do not want to get left behind.
Val?
Well, I couldn't agree more with what David just said. And I was in a cybersecurity conference the week before, and this last weekend I was with the AI conference speaking. And I think this is the record that I'll put on record that as a cybersecurity or a defense security person, I would say that we have to experiment. We have to use. Our biggest failure is going to be if we put ring fence around it and not use. Experience. Nothing teaches you than experience and failure. So that is the entrepreneurial spirit. I'll leave you with that. I think that is exactly what we should do in terms of learning. So without failure, we don't learn.
Dylan?
Yeah, I'll take this opportunity to be a little bit more positive than maybe some of my other remarks. Even though there might be, short-term dual-use defense tech hype bubble, I think long-term the outlook is very positive. Things are changing. The customer is changing. There are areas where tremendous value is going to be generated for the country, for the economy, for folks' jobs, for industry, for revitalizing communities that have been neglected for many, many years. Areas like shipbuilding, maritime autonomy more broadly, space, which I mentioned earlier, manufacturing, supply chain, automation in general. So there is a lot of upside to be had. I would just encourage everyone to be very critical on sort of these short-term, what look like headwinds or tailwinds, and really, don't lose the forest for the trees and having a longer-term outlook on what it means to be in the defense tech industry and what dual use actually means in practice.
All right.
That's a tough one to follow.
Yeah.
I think from what you said, again, I'm really hopeful that peace is more profitable than war in the long term. From the perspective of a family office getting involved in these industries, I think one of the biggest challenges is startups pitch family offices on something outside of their sector expertise. And a lot of these people have a lot of sector expertise in a very traditional industry, like manufacturing, like shipbuilding. Yeah. A family that's leading in shipbuilding isn't necessarily going to want to invest in your film startup. So I think having that knowledge when you go in for a pitch is more important than ever before, but also making it look like something they understand. So if you are pitching a high-tech product to a more traditional investor, I would really focus on framing it as something that they can reference, like, is it something that has to do with development if you're dealing with prop tech, which will be a big industry that comes up post-war here. And that's it.
Okay, I think I'm going to end with something somebody said to me a little while ago was the one thing that AI will not replace is experience. That's for those of us who've been around longer, that gives us all of a sudden a real big advantage. Right? So thank you very much, and thank you everybody on the panel. I really appreciate you being here.
Thanks.
And Sasha is now going to grab the microphone from me.
Thank you, Steve. Thank you, panelists. You are free to go. All right, this is, I mean, the one that starts now. It will start at 5. Do we have Troy here? We do? Where's Troy? No, we don't have Troy? No, all right. Okay, so the last panel of the day is the panel on venture capital, of course, you know, fittingly. Pitch is a venture capitalist, Bill is a venture capitalist, so our final panel will have fun. I would like Neil, Sue, Tas, and Josh, please come onto the stage. Sue, where's Sue? She's coming. She's coming. Hi, Josh is here. Neil is here. Wonderful. Where are my ladies? Okay, Tas is here. Perfect. And Sue. Keith, I know you're not Sue's keeper, but where is she? I will not wait for her. What? No, Troy is not here. No. Okay. All right. Now, people who have been coming to this event for over 15 years and 20, they know that if Sasha is not happy with the last panel, she might cancel the reception. Right? Okay, somebody is not even listening to that. I would like everybody to stop talking and pay attention, because once we're done with the last panel, we will have a reception with lovely wines and some appetizers. All right, Bill, I'm talking to you. We're starting a panel. All right. Since it is our last panel of the day, we will keep it. Remember what I said in my email, that we're not doing commercials. We're not discussing trivial stuff that people can read online. We actually are going to reveal some of the kitchen secrets, right, as to how we invest in companies. But we'll start with the introductions. Tas, please, start with you.
Hi, everyone.
I mean it about the reception. Guys, stop talking.
Hi, everyone. I'm Tasnia Huck. I'm with Javelin Venture Partners, where I'm a partner leading early stage, predominantly technology startups. I would say a lot
Daniel,
of
I'm talking to you.
is in applied AI across B2B and B2C. My background really quickly, I've done a bunch of things prior to my role at Javelin. I was a banker for a few years in M&A. I was part of the product team at Toast. I joke that the biggest miss of my career was not staying, because I was there pre-unicorn, and of course 3 years later they went public at 40 billion, and so, you know, you have these experiences, but anyway. And then I got my MBA from Harvard Business School, dabbled in growth private equity, only to realize that what I truly, truly love is partnering with early stage founders and trying to help them scale, because, man, God knows it's tough.
Yep. Josh?
Hi there. I'm Josh Pasmantir, one of the co-founders and managing partners at Congruent Ventures. We're an early stage fund here in San Francisco, focused on all things climate sustainability and resilience. Background-wise, I spent the first roughly 15, 16 years of my career in the semiconductor world, which is once again exciting, although that took a long time to come back. Studied physics originally, and then ended up back in the venture ecosystem, where I've been for best, 16 years, all of which has been investing in climate sustainability, energy, that sort of thing. So, yeah.
Neil?
Yeah, thank you, Sasha. Pleasure to be here. Neil, also managing partner of One Flourish Capital. We invest in founders who have bold tech, mission, and high personal integrity. Do a lot of deep frontier tech. So early we were in Anduril, Icon, world-leading 3D home printer, Ceronic, a bunch of really cool companies. I used to work at Google. I managed deals and investments, which was super cool when Larry and Eric and crowd was there. So got to help launch Android and Chrome and a bunch of cool stuff, and then founded a company and sold that in 2021.
See, they know what they're doing. That's what I'm saying. Now, the way I have the panel, we are open to your questions at any time. So you feel free to interrupt, raise your hand. Keith is somewhere in the audience, and he will help you with the microphones. My first question is, venture capital, art or science?
Yes.
Yeah.
Well, because look, I'll tell you two things. You have to be really smart to find the right deals, and you also have to have art to win the right deals. Because it's very competitive. A lot of the best deals we're in were way oversubscribed. They only took our money because they believed in us.
Early stage, more art. As you keep scaling, more scientific. Because there's late stage venture too, right?
I think that's about right. Plus, once you're in a deal, there is a lot to do along the way, and I think that becomes much more science than art along the way.
Speaking of deals, what do you remember most? The deals which you have or the deals you missed?
I think it's equally the deals that went horribly sideways and the ones that have gone really well. Not a lot in the middle.
I agree with that. I actually think the ones you made a choice and you decided not to do it and you sort of forget those. It's the ones that you're married to for 10 years. We basically are all promiscuous with a bunch of brides or spouses, if you will, right? Because you're in this for a long time. And the ones you want to avoid are the tortuous ones that eat all your time, and the ones you want to be in are the awesome ones, which actually generally don't take much of your time because they're awesome. So there's actually an interesting inversion, is that the worst deals try to eat up most of your time, and the best deals don't even need you. So you really have to be careful how you manage your time.
Unfortunately, your reputation is often made on the ones that are not going well, and so you can't just completely abandon those and run for the hills. So.
Agreed.
Nothing to add.
No
Completely
comment.
agree. It's, yeah.
How do you find your deals? How do you source your deals?
I can go first. It honestly is extremely diverse. Obviously, I rely on my alma mater. There's Ilya, who's a professor from GSB, actually released the study where they said HBS provides the most unicorns from amongst all the different business schools, so very, very active within HBS. My partners are very active within GSB, Berkeley. So educational institutions are just great grounds because that's where students go and they're kind of hacking. And
okay, the educational.
Okay, education, sorry. Pre-seed funds, so investors that come in before us. Companies that we've been part of, Toast as an example, and then portfolio companies, and then these then compound over time.
Yeah, I would say it's almost entirely network. So 3 out of 4 deals, we're the first institutional check into these deals, so they don't really come from other investors, generally speaking. So it's all really our network. It's the portfolio companies we funded before. It's their referrals. It's later stage VCs. It's their them sending things that are too early for them. That's almost everything. I mean, we don't do. I mean, I think we've done outbound sourcing technically like on 2 deals ever out of 70, and it's the nature of most of these companies didn't exist a few months before we invested, and so you're really just kind of constantly showing that you exist, and making it easy for people to find you. At least that's our world.
Yeah, totally. No, great description. I think one way to think about this is that we're investing in people. And the best people know the best people. And typically it's like magnets. It's like there's gravity of just great people pulling great people towards each other. And that's where you spend your time. And they tend to, whether it's your portfolio companies, it's other VCs, and that density, it's incredible what comes out of that. And then when you do your reference checks, you can tell really quickly who the great people are and who are likely to have a decent outcome, but not that asymmetric $1 billion outcome or $10 billion outcome.
If I may quickly add, because yes, network is super important, but increasingly I do spend a lot of time on X and LinkedIn, and with all these launch videos, where if I see a founder doing a really good job in content marketing, I for sure will reach out. And even though outbound is, yes, 10%, like maybe 10% of my time is within sourcing is outbound, I do it because the best founders are also, they might, somehow you might not be in your network and you want to ensure you.
Well, they might not be in your network. So I do outbound too, and I have some, but typically they have the characteristics, you can see that they have a really killer network. So.
Sometimes it takes a while for a big partnership to come to a conclusion, right? Now, what is the longest and what is the shortest time it took you to write a check after you presented it? You were presented by a company.
I've got good bookends on that. I think our fastest check was 2 weeks, but people we knew, so much easier. Come to a decision even faster than that. That was actually 2 weeks to get the money out the door. The longest was north of a year, and that was an incomplete team, and we were hanging around the hoop and trying to be helpful. But until it was a complete team, we couldn't pull the trigger. So, north of a year.
I would say similar, because there are those ones that you can be quick fuse on, but they're rare because you have enough baseline information. And some diamonds in the rough just take time. Sometimes people are sitting on ideas, they're pivoting around, you're like, look, you are brilliant and you're kind of lost right now. And then they find it. They find the right team members, the right idea, and all of a sudden you're like, that's it. And so that's where the people, I wouldn't give up on a brilliant person. Like Cursor's a great example of this. Like they got passed by some of the top funds because they were brilliant people without the right idea and the right momentum. And a bunch of people lament that. They're like, we should have just bet on the team anyway. But
some of the fun of doing pre-seed is we still make some of those bets.
Yeah, totally.
Brilliant people, I'm like, that's not
but
a great
it's like
idea,
a small
but
check.
You'll figure it out.
There's like
yeah.
I'm in the ball game check. But
Yeah.
I'm not putting my portfolio at risk. Yeah, you totally.
Similar range, yeah. It can be as quick as 2 to 3 weeks or as long as a year.
Okay, now 2 minutes for your commercials. Pick the best company you've invested to, your utmost success, and tell us about it. Just one company each.
It has to be.
I know you love all your babies, I get it. Okay, the latest success.
I mean, my personal favorite, we invested in a company very early that's called Icon. You can go check it out. They're world's leader in 3D home printing. We love really hard problems. They had to develop their own form of concrete. They have multiple PhDs in material science, and then the robotics and the CAD design system. And they literally have contract with NASA to like put landers on the moon now to actually like turn like lunar dust into stuff. And the guy did it because he wanted to solve the housing crisis and homelessness. And Jason Bauer's like this incredible dude, and you're just like, dude, you're freaking awesome. And I love that because they're trying to change the world in ways that are meaningful. And so the end cap on that is that their biggest thing is actually building homes in hurricane-prone areas, because if you put up a concrete home that can withstand 200-mile-an-hour winds, and the roof doesn't get ripped off, and it basically doesn't take water damage, you're solving this massive housing problem that exists. And so I love that intersection of trillion-dollar market plus like awesome innovation plus awesome bold mission, and I'm just like, go.
Cool.
And so this is definitely one of the harder questions. Like, which of my children do I like the best?
I know. That's why I said
Like,
pick the
do I have to
latest.
say one? Yeah, there's at least one I can't talk about right now. But let's see. Most excited historically, I invested in a company called QuantumScape, which is doing solid-state batteries and finally starting to ship them. You know, went public years ago, but still super excited about it. So that was super fun. And you know, we have a nuclear fusion company right now, which is really charging and really stealthy, but on the cusp of actually showing material progress and net gain.
I'll cheat and maybe I can name a few that I like because they're in different categories. And these are not all my personal investments, but the firm's investments, and I'll touch on one personal one too. Thumbtack, which is a home services marketplace app. Hopefully a lot of you have used them. Whenever something breaks at the home, it's a huge game changer. Masterclass, which if you love education and you love entertainment, you're hopefully on that platform. And the other one I will say that's probably maybe a little bit more in the deep tech arena, it's called Legend AI, and they're creating an LLM experience, but for Earth data. And so how do you take satellite imagery and do cool things with it within geointelligence?
I'm just wondering, should I go and tell those people outside that they're not getting any drinks? I might do that. But I'll send a messenger first. Lida, why don't you deliver the message to them? That they need to go inside. Yes, thank you. Thank you. All right. How do people get into venture capital? How did you guys end up becoming investors?
There is no single path, really. Whatever you were doing, try and do a good job, start getting embedded into the startup ecosystem. Coming to events like these is a great start if venture is an interesting path for you. And it's serendipitous. I don't know that there is one singular path.
I'll give a few examples. I mean, starting your own firm is certainly one way. Probably not the easiest or the best way. But I joined a friend of mine for business school starting my last firm. And it was just the two of us for a few years and built it up. So that's one way, join someone you know that you trust and you want to partner with. But if I look across the 16 folks we've hired at our firm since the get-go, we've had partners come in literally through a random alumni email through business school. We've had open call, literally just an open application process when we just wanted to see what we'd get. And we've hired people we've worked with in the past or worked with on the LP side. There's literally there are no two people that came in through the same path out of 16.
Yeah, the only one I would add to that, which I've seen a ton of people do, is be early at a really, really, really successful company that's got that culture and brand. I mean, there's a bunch of people. South Park Commons is like a Meta thing. Pebble Beta came out of Meta. There's all these different accelerators and things that have been people who were there early and saw what it was like to be in a winning culture. And yeah, a number of them have been very successful.
Mm-hmm. So how long does it take you to make a decision whether you're going, just be honest now, right? Like you just heard the presentation and do you really will take 2 weeks to figure it out? How long does it take you to decide that even you want to spend time investigating and doing due diligence?
I think no's are pretty fast, mentally at least.
Yeah, so are we talking?
But the yeses are anywhere from really fast to really slow.
What is really fast?
Really fast in the course of the meeting. You may not communicate that, but halfway through the meeting, you're like, this person is amazing. They're tackling a huge opportunity, and they have the entitlement to win. It's like you can tell pretty quickly.
Right.
Yeah, well, I hear you on the nose. I do think I always sleep on it though, because
Yeah, never tell them that.
I
Yeah.
never tell them that, because I'll wake up the next day and be like, oh my gosh, I didn't think about these 3 factors, these problems in the market. There's another competitor out there, but I think that you can say no to most deals in like 5 minutes or less, probably 99.5% of the deals, and it's those other ones that where you actually have to put the time and the work in to figure out that's where you want to spend your time. And those are the tough thing with that one is when you get across the finish line with your investment committee. But that's why I love having investment committee because there's a little bit of rigor there.
There's always 1,000 reasons to say no to every single deal you do. So you got to.
Right, but isn't it very true that 95% of the time?
Well, 95% of the time you'll just say no outright. The other 5% you'll say yes, but there'll still be 12 reasons to say no.
Right. Yeah. Right. So getting to
I was just going to say part of the process that I've started doing a little bit more now is, and not every founder does it, but I do prefer looking at a deck before, because that tells me, okay, at least I like the market, at least I like the category, and even if the product isn't quite there, they're likely pivoting anyway. And so the call is really to figure out the chutzpah of the founder. Primarily, how are they answering this question and that question, and do they have that X factor? And I think that's ultimately what you're maybe trying to get at with the question, which is, okay, your instinct on, oh, do you like this person, or is this person charming? That happens so quickly mentally within 30 seconds or maybe a minute. And so if that was where you were going with it, I would say 100%. Like you can tell pretty early, like, okay, I do think there is something special with the founder.
Yeah, totally. And usually, like very honestly, if somebody can't tell me something that I did not know in the first 2 minutes of the meeting, I'm like, why am I talking to you? If you can't tell me something I didn't already know that wasn't obvious, like don't start a venture VC-backed company on average. And so that's one of my litmus tests to say, should I even be talking to you?
I think that's a really good one. I mean, we spend so much time, like some of us are, I'm more of a specialist. There's a narrow scope of areas I invest in. And within that scope, I've seen literally thousands and thousands of companies, and they're really good at teaching you stuff. Like that's I mean, there's no better teacher than an entrepreneur who wants your money, and so you get pretty steeped in these areas. And if you end up knowing what's really impressive is when the entrepreneur knows something better than you do in a specific sector you've already dug into. That's super impressive. It's not often the case, sadly. But they'll get there eventually, and they'll show that they can. But when they do, show they know a lot and they educate you, that's a huge win.
So you've missed all the hard questions, but I'll find some for you.
Thank you.
Okay. Why don't you tell the audience something about yourself and your fund?
Thank you so much for having me. I drove from Palo Alto, and then so we're based at downtown Palo Alto. I guess like this is a very important event, a very important week, and everybody's coming to San Francisco. And then so based at Palo Alto, and then have been in this industry doing early stage venture for 14 years, and then we have been laser focusing on data mode and network effect. And then to a lot of you guys, especially in Silicon Valley, that's given. But how to actually create your data flywheel became really, really important. And then maybe like I want to tell you a little bit more of our portfolio, like Chime Financial. And then we were their first money back in 2013. Yeah, and then we enjoyed their IPO last year in June. And then later but it's a totally different story on the other side. There was another company, EquityZen, yeah, which was acquired last year by JP Morgan for almost $1 billion. And then they haven't been raising money for over 10 years. Oh, wow. Yeah, so you can see that we really wanted to actually create something, especially Anthropic, they're getting into enterprise. And then, so it's very hard, right, for startups. But don't be afraid, because if you work on something that nobody else cares, and then you can be sustainable. And sooner or later, when the time is right, only EquityZen's solution was ready. That's why they were acquired.
Right, right. And sometimes you go to see 100 no's, and it takes one believer who will be a champion. How do you compete with humongous funds like A16, Sequoia, others? Do you compete with them, or you just find a little niche and stay there?
They don't invest in climate. No, I think, I mean, for any small early stage fund, I think your advantages are being a specialist and being incredibly agile. I mean, we can't pay the kind of prices they can because they just don't care about those entry points, which is, you know, totally logical from their perspective. So we just try to be agile, make decisions quickly, and be super helpful. We try to earn our spot.
That's it. So we co-invest a lot with them, with Andreessen, Menlo, whoever. But we're a smaller check. We don't lead the round, but we outpunch our weight in terms of the value that we add. And so their founders will tell their, you know, GPs and other people to take our money, because we do more than the share that we've invested in terms of assistance. I think that's the way that we win deals.
Yeah, like, sometimes I hear that venture capitalists have this herd mentality. And if everybody invests, what was it 3 years ago? Blockchain. So every startup you see, they have to have this word. Then there would be another word. Now they all need to be AI. How do you deal with that? Do you follow the whatever?
Here's Sue. What do you do?
Oh, yeah. I feel like we love hypes. You know, every 18 months there is this new hype, because hype is important. Hype will drove companies from Stanford and then really top engineers from Google to wanted to come out and start a company like many of you guys. So I'll give you an example, like one of my partner's kid who actually joined, you know, like a company, right? So Flapping Airplane, which is the seed round was valued $1.5 billion. And then I think Wall Street Journal covered it, right? It says Stanford dropped out plus AI equals to 1.5 billion. So, I mean, but if you really talk to those kids, and they were like, okay, this is now or never opportunity. Because their professor was like, hey, you should really join this company. Otherwise, once you graduate, even you probably heard like at Stanford, there's a lot of undergrads, they have to do co-term to get a master's degree for a year more because they were not ready or they couldn't find a job. So, you know, I feel like we should totally take advantage of the, you know, the opportunity. Yeah, we like that. We like bubbles.
You like bubbles? Okay. Bubbles are good. Let me check the audience for the questions. Do we have any questions so far? Come on, wake up. Let's ask questions.
Self-serving question.
do you guys invest in cybersecurity?
Nope.
Yes.
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 All right. Daniel, but it has to be a question, not a commercial.
Yeah, so guys, you are like experienced VCs, and so how do you, for so many years, approach LPs, like previous strategy, and what, with the modern world, like everything is changing with AI, what is your current strategy to approach, find, and maintain LPs? Like, if you can share.
You say LP, you're saying LPs, like limited partners?
So what's your strategy on, like...
Investor base?
Yeah, like finding LPs, maintaining the LPs.
Keeping LPs happy, how do you do that?
Returns? Yeah, right. I mean, I think some of us, so I do think a lot of LPs look for the why. Climate, I mean, we're also like, because we One Flourish, we're like trying to do things that are going to make humanity better. And they see those in the businesses we invest in. And then they tell their other investor friends to join. And we get referrals. It comes back to referrals always, right? I mean, we literally have had a lot of our biggest checks come in through referrals where investors like, I told my friends they had to come in too. And that I always love that. Those are easy conversations to close.
Yeah, I would add just like a bunch of things that maybe weren't the most obvious, ahead of time, but are really obvious in hindsight. They're looking for the same thing we're looking for, right? They're looking for a team that's functional and continues to be functional. They're looking for good partners. They're also looking for people who kind of do what they said they were going to do and continue to do it, and don't have scope drift or strategy drift, because they're trying to fill buckets on their side. And so if you do something that's like, I'm starting a seed fund in climate, and I go do like, Anthropic's last round and, $1 bazillion, that's not why they invested in our fund. And that'll annoy them to the point where they probably won't come into the next fund. So I would just say, do what you said, and of course returns. At some point they're going to care about
Or
performance.
sometimes they commit and then they need to sell their yacht, right?
No. Yeah. I think on top of that, I totally agree. And then you probably see all the survivors here, right? So when I got into the venture business almost 14 years ago, there was a lot of funds, managers. They were like, oh, my fund been 10 years come to an end, right? So that's a lot of that. But I feel like on top of the return and the relationship and the very crispy focusing on specific thing, I think probably all of us, we try to actually make ourselves replaceable. So we have a succession plan. Who we wanted to actually replace us? AI agents. So I feel like it's really popular.
Wait, say it again. You want to be replaced?
Yeah, I want to be replaced. Like, because I was hired as the first employee at Amino. So for the last 14 years, I have been finding ways to replace myself. Then I can be promoted to be partner. And then I just have to talk to AI agents. And right now, our LP, so we actually develop our own platform. So it's like real-time reporting system, and our LP can say, oh, your DPI ARR as of today. And also they can say, oh, Sue, I saw you guys invest in a company yesterday, and there was synergy between us. Can you make an intro? So this type of ongoing reporting system is something that actually we feel like in our industry is towards to that way.
Yeah, but they will not be making investment decisions. Do you really?
Yeah, they have to invest in us to see the ongoing reporting system. Right?
I was going to add something maybe more qualitative, because yes, the top #1 quantitative returns, right, DPI, and not just unrealized returns, realized returns, so cash and cash. But there are qualitative stuff too that they really care about. So for example, if they can say, hey, I have exposure to XAI and SpaceX, or, oh, I had exposure to Moltbook and look what happened, the craze with the 48-hour post off of the back of OpenClause's infrastructure. And so they want to be able to say that they had exposure into these viral or well-known brands and names. When they can say, oh, you invested in a company, they launched, and then a public company stock dropped 10% with the Sassacre stuff, that's the kind of qualitative news and interesting things that I think engage them too.
We have a question over here.
Okay.
First of all, thank you. Great panel. So I've done a lot of research on AI governance and ethics. My background is entrepreneurship, global executive. So I wonder, sitting where you guys are, how you manage that? Is that a factor when you invest? Is there risks there for investing in technologies? You talked about obsoleting yourself, AI agents, which we have no idea what they're doing. We're starting to learn it. So can you help us understand how do you go about that in your day-to-day and decisions whether to invest or not? Thank you.
Every problem's an opportunity too, so we've actually done some investments around controls for that. But maybe I say it at the highest level possible, things are going to get really weird. Things are going to get weird beyond your expectation of what weird is. And I think that part of our approach to dealing with that weirdness is being, one, invest in founders who you think can navigate it well, because you can't predict the weirdness that's going to come, but they need to be able to try to navigate that. And then two, is you yourself need to experience it enough to know how weird it's going to get. Because I think if you're not learning exceptionally fast right now, you're so far behind you don't even realize it. That would be my one thing. The pace of change, the previous panel with some of this, has never been faster, and that means the slower you are at adoption, the gap between you and where other people are is so massive, you can't even realize it. So that would be my thing on AI governance, is try to be in the thick of understanding what is happening so you can figure out how to navigate it. Otherwise, it's going to be, or have people on your team who can. You've got to always be learning in this environment.
Yeah, I totally agree. Like governance, compliance, and large language model can be really big businesses. Like I went to the HumanX, there was a lot of booths, and those companies have been around for many, many years, but they are focusing on AI governance. Why? Because they have trust from their customers. Then suddenly AI became this new thing that their customer wants. And also think of fireworks. So they are actually working on the compliance for open source models, and they are building our company. So this is really, really exciting space.
My name is Alice Wilms. Thank you for the productive conversation. And I have a larger question. I am a financial advisor. So in terms of financial services and technology and evolution of venture capital, right, and we just heard family offices, where do you think it's all going? Is it possible that AI and tech will be like air we breathe in? So it will become a commodity eventually, right? And then what will be the value system? Like, do you think broader?
The one key thing to keep in mind there is a lot of people still want to trust people. So I think that the calculation of the portfolio and how to allocate the capital is going to be very much, on average, commoditized. But the actual trust that someone's going to say, I trust that you're actually doing this for me and understand how it's working, that may actually increase in value. So you may have this real world where like there's a lot of commoditization, but the actual RAA or the money manager, the family office manager actually increases in importance, because people need to trust somebody that can actually use the tools. That's my guess, but I'd love to hear other people's thoughts.
I agree. And also, even if you could do it, there is time and energy involved, right? Sure, I could spin up an agent and they will automatically do my taxes and all that stuff, but you still need to check and review, and at least now, I don't know about in the future state. And so 100% on like using someone trusted or partnering with someone trusted who scales your capabilities and abilities, because obviously there are other priorities in life too. So I think I completely agree with you.
Hello, so previously it was mentioned that if a founder has a very good LinkedIn presence, that could make you reach out to them. So I'm wondering, from your experience, how can a founder leverage LinkedIn to attract investors? And also I want to ask the opposite. If a founder doesn't have a good LinkedIn presence or doesn't care about their LinkedIn, how bad is that?
Yes, I would say have a LinkedIn. If I can't find you and somehow your pitch deck has made it to my desk, I'm like, who? I would invest in a LinkedIn presence, personally.
Yeah, you don't necessarily have to be doing a whole bunch of elaborate social media, but certainly having a presence is important. It's, you know, I wouldn't say it's like a major component of like why we would invest. It's helpful if they're good at, I mean, people who are good at communicating are good at communicating on many media. So LinkedIn is just one of those. So if you're very good at explaining what you're doing and then, you know, building a presence there, you're probably good at doing that in other venues with sales, with fundraising and all that stuff. So.
Hey, first of all, my name is Joseph Finberg with Laurelin Technologies. We're building fusion SMRs using deuterium fusion in a field reverse configuration. I did have a question about deep tech and capital intensive ventures and how early stage startups or early stage venture capital firms value an early stage company that's capital intensive and doing deep tech like ours, which probably won't have customers or return on investment for potentially years. How do you value that? How do you assess that? And my corollary to this is, does X matter as much as LinkedIn, and how much posting do you want to see?
I would say, sorry, just to answer that question, I would say it's less, I don't want to make the post about like do a bunch of AI slop, be on X, say random things. It's more, think about creating a community. Think about creating recurrence of being present on top of mind for investors, your customers, your suppliers, whoever it may be. So my comment was more towards it does help, and I have seen it having impact. And so why wouldn't you do the one, even if it's 1%, why wouldn't you do it, was kind of where I was coming at from. But by no means was the suggestion just, do random things on X.
Yeah, it's good for some kinds of discovery. But to answer your other question about how early early stage hard tech companies are valued, I mean, we think of this. There's infinite ways. I mean, you have companies that price at low single-digit millions. There's companies that price in 4 or 5-digit millions. It depends entirely on the situation. But what we look for is we try to extrapolate the capital intensity over time. And if we're really being detailed about it, and there are certain kinds of companies we've done this for, we're trying to figure out, okay, if they have to raise 6 rounds of capital, and this is kind of the appreciation, this is kind of the value build at every milestone, how much is that going to make? What's our return profile potentially going to look like? I mean, it's garbage in, garbage out, but it's certainly a directional call. So if your company is going to raise, it's got to raise $2 or $3 billion to build a full-scale prototype and a first commercial unit, we need to back that out. Are you going to be a $5 billion company at that point, or is there another answer? So. Yeah, that's a very vague. Yeah.
So that's a really interesting question. For LinkedIn, you have seen LinkedIn used to be a really not really profitable company because they don't have a lot of revenue. But later on, you've seen they have a lot of revenue because of the ads business. Why is that? Because investors, entrepreneurs, they started to look at the wall of LinkedIn. So we actually surface deals from LinkedIn. Matter of fact, we actually build an agent that every single day they can reach out based on my criteria. I'll give you one example, like stealth mode, founder have certain background, certain education background, and then you probably will receive my reaching out for LinkedIn even without me knowing about it. So this is how, those agents can do for investors. So think that if you don't have LinkedIn, you don't have those signals, and then investors might not reach out to you. And then on the other hand, for the hardware, for the hard tech company, so I feel like for Amino, we definitely invest in hard tech company like Answer Energy. So we invest in them, and then they actually got government grants, almost like 55 collectively, like 55 million non-dilutive money, right? So I feel like so we work with investors who laser focusing on hard tech. Why? Because we're basically using our own money. So we're looking for financial return. But for some investors like Overlap, they actually help you to get government grants. And they have other ways like venture debt business too.
Okay, we're having a mini lecture here, which is good. It means that could be continued. But I have a question for you guys. Are you actively investing? Are you writing checks like this month? I mean, do you have capital to deploy?
We have a wire going out tomorrow?
Yeah, this week.
Yeah, so you are. What is the size of your checks?
I mean, we write, sub-million to 4 or 5 billion first checks.
Does?
1 to 5. 1 to 5.
200,000 to 6 million.
Okay.
Yeah, it was a small 250 to $1 million.
All right. So we have founders of the companies in this room. This is your opportunity, if somebody is brave, to pitch on the spot. And they will give you a real-time feedback. You ready? Okay, come on. No,
This is convenient. Oh, up there? Okay, sure. Hi, everyone. I'm Sherwin Farhang, former head of security at Turing. I'm building an AI security engineer that takes companies from zero to secure in hours, not months. Our company name is ZeroSec, as you can see on my t-shirt. And yeah, bottom line, we're starting where the risk is highest, the endpoint. So 70% of breaches occur at the device level, laptops, servers, virtual machines. And we're building an AI security engineer that automates the work that I used to do throughout my career. I've had so many frustrations having to do things manually, write patches, harden devices, etc. And through the power of AI, we've made it much, much easier. And so the way we've done this is we deploy and integrate a bunch of open source tools to allow a company to build a security program from the ground up using open source. And if they have closed source tools in-house, then we integrate them. And by having our AI learn and how to use each of those tools, we automate the work that I used to do.
Okay, that is your elevator pitch. Did we understand what he's trying to build? Do we have any questions?
Who's your ICP and what exactly? Who are you trying? Are you like SMB small? Are you actually going after bigger companies?
Believe it or not, our first client has 10,000 endpoints. They're publicly traded. But I have been chasing MSPs. There's a very large manufacturing firm I'm talking to. There's a Fortune 10 company I'm talking to that's in the food industry. Bottom line, every industry needs proper security, right? And yeah, some of these guys can spend millions of dollars on cyber.
What do you know that nobody else does?
I guess, what do I know that nobody else does? Let me think about that for a second. I think the reality is that security needs to happen at the deep level. You need to practice security in depth, which means you need to harden your devices against all the attacks that are coming, because the more the bar is lowered to attack the surface, the easier it is to get into a company. So attackers only need one vulnerability to kind of breach into a company, and once they establish that foothold, then they can spread out from there. And so you really need to harden your devices as well as possible, because companies getting breached within hours.
So Neil, what do you think? Will you invite him for a meeting after this?
I've appreciated the pitch.
All right. Thank you, thank you, thank you. Do we have somebody else to pitch? No, we want somebody to pitch, not a question. You want to pitch? Okay.
Hello. So I'm Jay Samper Finberg. You can call me Joe. And I'm building the future of American energy independence and American dynamism. My background is as a plasma physicist at Columbia and Oxford. And I worked in the plasma lab there, where I worked on what are called magnetohydrodynamic and gyrokinetic turbulence in tokamaks. And I founded this company called Laurelin Technologies, taking my research on plasma stability in tokamaks, and built this cool little SaaS company that sells data modeling to other fusion companies and to university labs. What we found there was really interesting. It's that the instability inside of a tokamak makes it not a viable model for fusion power. What does work is what's called field reverse configuration, which is high beta, not low beta. Beta refers to the collision rate. Now you want to have a lot of collisions happening in your plasma, but when collisions happen, you get instability, it loses energy. We found we can do a pulsed model, fire two blobs of plasma at each other in a linear reactor, fuse them in the center, dissipates almost instantly, and you're able to extract the energy from that both through induction and through regular old heat transfer, boil water, turn a turbine, you know how pretty much everything is generated. So we're doing this differently than the other FRC companies. Two of them come to mind, Helion and TAE. Those guys use, respectively, tritium and helium-3 fusion, or boron with proton beam injection.
You have one more minute.
What this does,
no, one more minute.
The issue with these is that those are scarce fuels. We're using deuterium fusion, which is much more abundant. We are using actually existing science and abundant fuel for our reactors. The science exists to build this, and our plan is to sell these to Uncle Sam to be small modular reactors for forward operating bases and help solve the energy crisis that way, using existing science. This is my pitch.
I know, you got to get it down, but the thing I would say to you, the reason Commonwealth Fusion got funded is that they showed they could build the magnets. There's an execution problem in there. So I would just say prove you can actually execute, because otherwise, that would be my guess.
Well, we have luckily our CTO is a specialist in high Tesla, high vacuum environments, who I met at Oxford, who's a brilliant man, and we're very lucky to have him. We already have our designs for the magnets and our reactor and our white paper, just looking for the money. Looking for 5.2 million for a 24-month burn rate.
All right, Josh, you have a question? No? Okay, thank you.
500 million is a little high for us.
I understand we have 2 more companies. Okay. All right.
All right, gentlemen, you got 2 minutes. I'm going to time. Ivan's next.
Sorry, guys, you've heard me already.
So. You're back. Oh, I know you're mad you didn't get an award, but you would have pitched today.
Yeah.
Yeah, okay.
Do you mind?
I do not mind, because they were not here.
So
this is one of our finalists.
Yeah, I saw him. He was great.
Right.
Okay. So Buddy is the leading AI for kids with over 76 million app downloads. It's a consumer app for now. We just reached 10 million ARR after growing 42% in first quarter. And yeah, it's based on.
When
it's
did
not
you launch? When did you launch the app?
In 2019, before ChatGPT, but we only raised our seed round in 2024 from Bitcraft and Edge Capital, and we basically after that we launched just this awesome update, tripling our retention, dramatically improving LTV, and so we tripled our revenue in the US in the last 6 months. What's important? We are operating in this highly regulated market of children under 12. It's highly regulated and highly fragmented. So no leader on this market today. And we also accumulated the largest data set of children's speech data. Like this also and created this unique COPPA compliant, super safe, super efficient AI stack specifically to work with children.
We actually invest in Rapid, which also launched at the same time, probably at 2018, and now they're a $9 billion company because they actually they started with EdTech, teaching little kids how to code, but they're using next generation technology, and then especially with large language model. So can you picture us, because just for toys and conversations, so that's it's definitely good, but it's not really have space, right? So how do you actually take advantage of those data? Because there was a privacy issue for kids' information. So how do you take advantage of those data to actually grow to be a bigger business? What's the end game with this data?
So with the end game, so first of all, we can't compliantly collect data from children and train our models. Of course, we also use large language models. It's the whole set of post-trained large language models, open source. So we don't use commercial models because so all data stays in-house, basically lives in my garage, never leaves home. Yeah, that's how we are compliant and safe. We control everything. And so the end game is to basically be the AI tutor for children, monopolize the whole market. Give every child their own AI tutor.
So is he getting a meeting? Is he getting a meeting with you? No? Yeah? Okay, good. All right.
All right.
I understand we have actually several more.
We got 2 more. That's it. And then we'll cut it. And then you can talk to us afterwards.
Well,
so we're going to have Maria.
Guys, can you do 2 more? I am making you work. I'm sorry.
2 more. 2 more. We got Maria and then Michael. And then we'll go back to you, Sasha.
Hello, everybody. My name is Maria. I do have a LinkedIn. And I'm building a cardiometabolic platform. It consists of 2 different wearables. One is a robotic bracelet that you wear on your forearm, and the other one is a necklace. You don't have to wear it as a necklace. You can put it in your pocket. That measures breath chemistry, so you blow into it. And they measure continuous blood pressure and non-invasive blood sugar. So I have done the first prototype for the bracelet. The results were promising, which is what made me decide to continue with this and turn it into a startup. I have a pathway to test my devices at LMU Klinikum. This is one of the biggest research hospitals in Europe. It's in Germany, in Munich. And I'm now fundraising for doing the prototypes and the research with the hospital.
Perfect. Do you guys have questions?
No, sounds cool.
So, Josh, you know, we didn't practice. We didn't bring any climate tech companies.
So out of my scope too, like wearables, and so it's hard for me to really opine.
Yeah, Aura is from Europe. It seems like in Europe it's a great incubator for healthcare wearable devices. And this technology reminded me of a really interesting biosensor, was inspired by dogs, right?
Actually, the necklace was inspired by diabetes service dogs because they can smell when you have highs or lows and they alert you. So that was my original inspiration.
Yeah, I'm happy that this is commercialized.
Yes.
That is very cool. Okay, we have one more. Thank you.
Yeah,
one
we have
more.
Michael. Hello, my name is Michael Fabosi. I'm a retired detective from the NYPD for 22 years. And raise your hand, I think we've solved the gun violence problem in America.
All right, no propaganda, no politics. Pitch your startup.
So GunSense has developed a device that sits in the ceiling like a smoke detector, but it's a gun threat detector. And all the technologies out there now are after the shots are fired. There's audio detection and other detection. We believe that's too late to save children's lives, and so we developed this device using AI and computer vision. 3D cameras are inside. It's an edge device that processes in the device, and it sets an alarm if someone pulls a weapon. So most of the shootings that happen in schools, the boy goes into the boys' room with a backpack, he gets through the first security. He gets his mind together and the gun together, and he comes out. When he has the weapon out, before shots are fired, GunSense identifies it and sets the alarm. We have first responders or people, sometimes schools have school security officers inside that could stop the violence before it happens. GunSense is going to save lives. We have over 600 in our pipeline customers, and we're going to launch in the next 2 weeks, and I can't wait. I just saw coming off the assembly line, and they're going to be in the ceiling, and here you'd have one. Someone pulled a weapon in this office, and immediately they would identify it.
That is
so thank you.
Thank you.
It reminds me of a company, Safely You. I think it's a billion-dollar company now, but they are actually for senior homes, founded by a Ph.D. from Berkeley. So I'm happy that you're using the technology for gun control.
Yeah, and we trained it on real guns with alcohol, tobacco, and firearms. So our AI identifies 3D printed guns, where other technologies use a large language model from Stanford and FBI. So I know that there are in dark web, from my experience, people doing 3D printed guns. All the other technology won't identify it, but ours will. And patents pending, like lots of them.
That is very cool. Thank you. Thank you for sharing.
Also, our ask, so it's basically self-funded through friends and family, about 1.3. We need about 1.5 right now for manufacturing, and then in the next few months we'll probably need somewhere between 20 and 50 because the demand is so great. Even a Fortune 5 company is already testing, and it's going to be thousands or tens of thousands a month being sold. We think the company will be worth about $1 to $2 billion.
All right, get out your checkbooks, right? Thank you. That was really good.
Love the mission.
All right, so Sue kind of was the most active board member. Do you want to say something before we close the panel? Josh, come on, say something.
Thank you, Sasha. This has been amazing. You're doing an incredible job hosting.
Well said.
I second that.
All right. Oh, I know. You get 2 drinks. All right. Fine. Okay, then. Thank you, Sue. Thank you, Taz. Thank you, Josh. Thank you, Neil. And we will continue.
Great.
Now, I would like to acknowledge... no, you can stay here or you can go back to your seats. People, first of all, thank you, everybody, for coming. I know that if I pull any of you on the stage, you will have a story to tell. That's what makes this symposium different. But I want to do special things for people who made it happen. You know, this whole event was put together in 2 months, which is for conferences so kind of crazy. So my friend Dory provided chocolates and the vases. Dory, get up, get up. Right? We have, where's Natalia, who provided flowers, this beautiful arrangement. I don't see her, but she probably will come for a reception. We have Ruslan, our tireless videographer, who actually will do all of it. We have Yelena, who is always on the background, and she understands. Like, I just like, look, and she knows what I wanted to say. So thank you so much. Also, she's the one who produced that blue globe in the last minute when the award was lost. And then I have Basang and Chris. Actually, I want Basang and Chris come up here. Chris, come here. Chris and Basang. Come. And Ilya. And Vish. And Keith. We're going to take a selfie. So these are the people who were extremely helpful. Chris has been with me since the inception of GTS, which is, I forget, 23 years ago, 24 years, 23? 23. Basan has been decades. Vish is, you know, has been, come here, Chris. Where's Steve? Steve, come here. Fiona, Steve, okay. Am I missing somebody? People who think that they contributed to this particular event, come here and somebody will take a picture. So, Steve, Fiona, come here. Right, our third partner, Ilya, who is behind all the stuff technical. Basang has been with us for, I don't know, a decade. Ilya, oh my God. I don't want to date myself, but is very supportive. Keith, you saw that he provided this immense panel today. Fiona created marketing materials in the last minute. And Steve is my partner who actually made sure that this venue happened. He had a beautiful panel and did all kinds of stuff like printing posts. I also have my son in the audience, but I will not point him to you because he's very shy. And, okay, here's my son, get up. Right, and then I have people who've been coming to my event like Piotr Monkarts for like 25 years. We have my friends. Am I meeting somebody? And you know what? I promised you to be on time, and we are. So, thank you so much. Thank you so much. I'll talk to you later, and see you next time.